एक दूसरा लेके आऊं?
इसके लिए ये लगा दीजिए, इसके लिए फिर
Yeah. Good afternoon to all of you. We will start with our today's session on business valuation. Yesterday's class, we understood 4 different methods of valuation of firm or valuation of business. Just to recap, DCF technique, that is discounted cash flow technique, wherein we learned dividend discounting model. Secondly, free cash flow to firm, FCFF model. And third one, free cash flow to equity, FCFE model. So all three are DCF techniques, discounted cash flow techniques of business valuation. The fourth technique we learned was relative valuation method or comparable company approach, which does not make use of time value of money, which does not use discounting of cash flows, and therefore it's based on financial statements, historical data subject to window dressing, not very reliable. We discussed limitations of this comparable company approach as well. And after going through all these methods of valuation of business, valuation of firm, I told you at the end of the session yesterday that tomorrow we will spend the entire time on balanced topics in business valuation, like valuation of shares, equity shares, intrinsic value of a share using balance sheet approach, valuation of, yes.
Sir, your voice is not audible. It's just cutting.
No, it's audible. There is some issue at your end. Audible, completely
Yes, sir.
fine. Sir, please continue, sir.
Aditi madam. Yeah.
Okay.
Well, my mic is okay. So today's class we will learn all other topics like valuation of equity shares, calculating intrinsic value of a share using balance sheet approach, valuation of intangibles like valuation of brand, valuation of goodwill. Some of these points you have already covered at TY. I told you yesterday, particularly valuation of goodwill was covered, but valuation of brand, valuation of know-how, technical know-how, valuation of intangibles, all these remaining topics, bache kuche topics hai, in this paper, that we will cover in today's class, so that 100% coverage of syllabus will be there. At least one question of each type we will try to solve. We'll try to understand from the past question papers or from sources. I myself will be giving it to you, and we will be solving it in today's class. So please be ready with your queries. If any topic in particular you would like me to cover, I'm going to cover from my side almost all the topics in business valuation by end of the day today. But in case you would like me to cover any additional point in detail, more in detail, please let me know. We will address those queries as well. So please write in the chat box, please write your questions in the questions. Welcome all of you to this day 3 of the crash course. To begin with, there are no questions. Good afternoon, everyone has wished, so good afternoon to all of you. Okay. One question has come. Yesterday's fifth sum, I did not understand how investment in current assets and market value of equity is solved. Okay, I will just give an overview on that. Yes, don't worry, so Madhura, I will give you an overview. Yeah, maybe that slide of yesterday I will share with you once again, so that you will understand. Yeah, slightly later, let me cover. I'll keep this at your request at the back of mind, and I will address this. Don't worry. Okay. So we cover all this topic, and thereafter we take the queries. Immediately the question which is there in front of you is calculating the value of equity share based on the data which is given to you. Now the question has come for 8 marks in December 19 exam, and this is basic calculation intrinsic value of equity share based on financial statement, based on balance sheet. So this is a balance sheet approach, and some financial data is given to you. Make use of this data to calculate value of equity share. This is intrinsic value of equity share. We will check that. Talking about calculate the value of equity share of Rama and Company. All right. Calculate the value of equity share Rama and Company, which is listed on stock exchange from the following information. Calculate the value of equity share of Rama and Company Limited, which is listed on the stock exchange from the following information. So you have equity share capital rupees 50 lakhs at the rate of rupee 20. So number of shares you can find out. Reserves and surplus rupees 5 lakh, 15% secured loans 25 lakhs, 12.5% unsecured loans 10 lakhs, fixed assets 30 lakhs, investments 5 lakhs, operating profit 25 lakh, corporate tax rate 25% including all, that means surcharge, HEC, everything. That is all included in this 25%. Price earning ratio 12.5, P multiple. Now this gives you a clue. Support your answer with complete workings. This information gives you a clue that you have to find out the intrinsic value of equity share, the worth of equity share. The basic formula is intrinsic value of a share is equal to price earning ratio, PE multiple, multiplied by earning per share. Price earning ratio, PE multiple, or price earning ratio multiplied by EPS. EPS, such a simple question and bonus question for 8 marks. So these numericals, if you try and if you get the correct answer, you get full credit points, 8 on 8. And this question I feel is a TYBCom question. Dekha jaye to, where you learned in financial management valuation of equity share, intrinsic value of equity share using balance sheet approach. Right, and here you don't have to even calculate goodwill, you have to just calculate value of equity share. So EPS pehle calculate karo, EPS multiplied by price earning ratio will give you market price of the share, market price or the intrinsic value or the worth of a share. So how to find out EPS? Earning per share is nothing but total earnings available to equity shareholders divided by number of equity shares. Total earnings available to equity shareholders divided by number of equity shares. You are given operating profit. Operating profit is EBIT, 25 lakhs. Operating profit is OP, EBIT. So 15% of 25 lakhs, that is interest on secured loan. Interest on unsecured loan, 12.5% of 10 lakhs. Right, so this is interest. From operating profit 25 lakhs you deduct interest. What you get is EBT, earning before tax, minus tax, which is 25%. You get PAT, profit after tax. Now profit after tax is not available for equity shareholders. You have to deduct preference dividend if any. But in this case, preference dividend is not there because preference share information is not given. So whatever PAT you get, profit after tax, is the profit available to equity shareholders, right? Divided by number of equity shares. Number of equity shares you can find out, 50 lakh divided by 20, you will get number of equity shares. So you will get EPS, earning per share. That earning per share multiplied by price earning ratio will give you market price of the share. That is intrinsic value or worth of a share. Worth of a share, book value of a share, all one and the same. Intrinsic value, worth of a share, book value of a share, BVPS, book value per share. Intrinsic value of share, worth of a share, all one and the same, which is different from the market value. This is what is the expected market price of equity share. What we are calculating using balance sheet approach is the expected MPS, expected market price of the share. Actual market price per share may be different from expected MPS. So there is overvalued. So if actual market price per is less than intrinsic value of share, then we say share is undervalued, right? Otherwise overvalued. So that decision will be taken later. Anyway, it's not asked. Simple question is calculate the value. It's a simple question of calculating the value of equity share. This value is intrinsic value of a share. Again, I repeat, worth of a share or book value per share, BVPS, book value per share, intrinsic value per share, or worth of a share, all one and the same. Yeah. So give you 2 minutes to calculate, because calculators are ready. You don't have to be methodical. Write down the approach step by step now, because this is a crash course, and therefore quickly do the workings and get me the answer in the chat box. I'm waiting for your answer. This is 8-mark question. I told you yesterday, no, on the day 1, I told you that most of the data is relevant data, but some pieces of information given in the question may be redundant. Pieces of information given in the as a final student, you should have that much maturity to understand which is the relevant data and which is the redundant data. Relevant data you should filter in, and redundant data you should filter out. That is ignore the redundant data. Please don't be under impression that every piece of information, every financial data which is given has to be made use of. ऐसे कुछ भी नहीं है. It's not compulsory that हर एक डेटा का इस्तेमाल करना ही पड़ेगा, करना ही है. ऐसे कुछ भी नहीं है. Some data may be redundant data, irrelevant data. So you should have that much maturity to understand which data is irrelevant. In any question, not only in this question, I'm saying in any question. Purposely, some data may be given to confuse the students. That is also possible. Yeah. All right. So I wait for your answer in chat box. Almost today's all problems are numerical problems and therefore extensive use of calculator, because I told you business valuation. Those who did not attend my last 2 days sessions, business valuation section B is 100% numerical in nature. Numerical. Hardly there is any theory, and that theory you may or may not even attempt. It's so much for option, obviously, because you have to attempt any 2 questions out of 3. So 1 question you can leave it for option, and you will find 1 question entirely also is not on theory. Only a part of it may be theory. So I always say predominantly or most important numerical subject, numerical paper only to score good marks, whereas performance management has part of theory and part of numerical, partly numerical, partly theory. Yeah, around 35% weightage may be numerical, but 15% still is theory in part A. Yeah? And therefore here now, yesterday also we have saw a number of questions on valuation. So today relating to DCF techniques, etc. from that worksheet, from that PPT. So today we are going to solve questions on all other topics. This is for those who are not attended my last 2 days session and who are attending for the first time today, in case there are any students. Yeah. All right. Some answers I have received. Let me see. Interest is calculated on both loans, secured as well as unsecured. Vinaya, that is correct. Yeah. Interest is calculated on both the loans, secured as well as unsecured. Purposely, I am giving this 2 minutes to you so that everyone can solve this and get me the answer. The moment I get the answer from some students, I will discuss the approach. Already approach has been discussed, but actual answer. Yeah, I have received some answers. Intrinsic value comes to 75 rupees according to Vinaya and Sumadhura. Yeah. Any other answer? I will wait for another minute or so. Let's wait for another minute. Those who are still doing it, let them calculate. Each one of you is expected to solve these questions right now when you are attending this webinar. Don't wait for me to discuss the answer. That anyway I will be doing, but that will be a passive learning. This is in your own interest. It is expected that you will solve. Doesn't matter if you make a mistake, You learn from those mistakes. At least the questions would have gone by your practice. You would have done practice on these numerical questions. So in exam, you will not commit those mistakes. So in your own interest, please do these practical questions. We are solving question number B, which is in front of you on the screen. Calculate value of equity shares of Rama and Company. That is the question we are doing. So only 2 students have responded so far, Vinaya as well as Sumadura. Rest all will have to solve and give me the answer. You have to calculate EPS, earning per share. Formula for EPS is profit available to equity shareholders divided by number of equity shares. EPS multiplied by price earning multiple will give you expected MPS, expected market price per share. So EPS you have to calculate. Basically 8 mark किसके लिए रखे हैं मुझे मालूम नहीं. Such a bonus question to begin with. Finding out intrinsic value of equity share. Question number B we are solving. Those who have joined little late, please catch up quickly and do the calculation. Today just sit with the calculator. Lot of numerical problem. Chote numerical problems we are going to do of assorted types. Valuation in context of mergers and acquisition. That is another topic we are going to address today, cover today. And therefore be fast. Yes. Intrinsic value comes to 75 according to Vinaya and Sumadura. What about others? Unless you work out, you will not get confidence. I'm repeating. All right, we'll look at the approach now. Look at part B. We're doing 6B. Yeah, 1 minute. Yes. Here is the solution. Answer is 75. Perfect. Vinaya and Sumadura, congratulations to you. Congratulations, Vinaya and Sumadura, that you got the correct answer. I'm very happy. No? Of course, I had mentioned the approach, but having given you the approach, you have done use of this. That I'm very happy. Yeah. EBIT is given, operating profit. Those of you who are doing or still are doing or have not done so far, just look at the approach. EBIT is 25 lakhs, operating profit less interest on secured loan at the rate of 15%. So if you calculate 15% interest on secured loan, it comes to 3,75,000. Calculator pe karke dekho. Then 12.5% interest on unsecured loan, that comes to 1,25,000. So 375 plus 125, your total interest comes to 5 lakh. 25 lakh minus 5 lakh EBT is 20 lakhs. Less tax at the rate of 25%. So 25% of 20 lakh comes to 5 lakhs, right? 1/4 of 20 lakh, 5 lakh. So PAT is 15 lakhs. Number of equity shares is 50 lakh upon 20. 50 lakh is equity share capital and face value is ₹20. So therefore number of equity shares are 2,50,000. So 15 lakh upon 2,50,000, EPS is 6. And therefore value per share is equal to, formula is given on the top, that EPS multiplied by PE multiple, EPS multiplied by price earning ratio. So EPS is 6 and price earning ratio is 12.5. So 6 into 12.5 given to you, that is 75. Value per share is equal to 75. Now this is on the basis of earning per share and pricing multiple. A composite function multiplication will give you expected value of the share, expected MPS of the share. 8 mark के लिए let me know from all of you, please give the feedback. Is it not a too simple question for 8 marks, and that too intermediate level question asked in final? This question asked for this in December 19, very recent exam, the last exam which happened last year, December 19, and for 8 marks. This is actually a TY BCom or an intermediate level question asked in final, right? So when you have such kind of questions, grab the opportunity and see to it that you get full marks, no calculation mistakes you commit. I don't think anything is there to explain further unless you have any queries. If you have any queries, you can ask. Otherwise, I will go to the next question. There is yeah, only Vinay answer yes sir. Okay, yeah, Vinay, good, thank you. And you will find the data which is redundant in this question, which is given, that is redundant data. You'll say reserves and surplus. Reserves and surplus किसके लिए दिया है? कुछ भी मतलब की चीज नहीं है. Then fixed assets not relevant, investments not relevant. Yeah, so 3 information pieces of information not relevant. Reserves and surplus, fixed assets and investments. ये तीनों का इस्तेमाल हमने किया ही नहीं. No problem, right? No issues. It is not mandatory that it is not mandatory that we have to make use of each and every piece of information given. This is redundant data and therefore you can ignore it straight away. All right. Along with this, part A question was on mergers and acquisition, but that we will take later. All questions relating to mergers and acquisition we will take later. See, this data was given ST Limited and B Limited, and some 5 questions were asked. 1, 2, 3, 4, 5. 5 questions have been asked and 12 marks का question पूछा था. 5 questions asked and 12 marks allotted. And part B, there was 8 mark question. Each question is of 20 marks divided into 2 parts, A, B. So it could be 15, 5, 12, 8, 14, 6, 10, 10, any combination. It could be theory, numerical, theory, numerical, anything. Yeah, that you leave it to the system, examination system. Don't bother. You study thoroughly. So any combination, most of the time numerical. When there are 2 sub questions A and B, both are numerical only. Generally, I'm saying. Because all together, we'll practice all questions on mergers and acquisition later on together in today's class itself. So if there are no doubts, I switch over to the next topic. So of each topic, we will look at only one question. That is what is my path in this class. Yeah. Yeah, that will be my path in today's class. All questions on mergers and acquisition we will take together later on. So right now we will not talk about questions, and in this December 19 exam, you will find question number 7 entirely was on, this is suggested answer I have purposely shared with all of you. Look at this December 19 question 7A. 7A, there are 2 companies which are given, merger of these 2 companies, and questions are asked on merger, 12 mark, or B, again it's a takeover, merger, takeover, whatever. Again there are 2 questions asked for 8 marks. So 20 marks on mergers acquisition. Can you imagine? On the entire 1 question, and in that question number 6A, again 12 marks was for merger, on mergers and acquisition. That means 20 plus 30, 12, 32 mark paper on mergers and acquisition, right, in section B. And 8 mark is on this equity share valuation. So those who are very confident in M&A, mergers, acquisition, valuation, they will be able to get even 50 on 50 in this paper, assuming all the multiple choice questions come correct. Okay, so all mergers, acquisition question, we will take it together later on. And these questions have a typical approach, typical methodology. So all these questions we will take later. Now, annual report of the company, we go to question number 8A. Now, this is a question where you have to calculate EVA, economic value added. Again, 8B is on mergers acquisition. So, देखो, even 8B में mergers acquisition is asked. This entire December 19 paper, valuation paper, if you do the anatomy, if you do the analysis, it is on mergers acquisition. एक पूरा 20 मार्क का question 10 was mergers acquisition. Question number 7A, 12 marks was on mergers acquisition, right? 7B may they ask equity share valuation, and question number 8 this question number 8A and B. A is EVA 10 marks and 8B 10 marks is mergers acquisition. Yeah. So now we look at the question on EVA. EVA is economic value added. Please write down the formula for calculation of EVA. EVA is equal to NOPAT, net operating profit after tax. EVA is equal to NOPAT, that is net operating profit after tax. Net operating profit after tax minus capital charge, minus capital charge. Net operating profit after tax, NOPAT. Yesterday we have studied what is NOPAT. Net operating profit after tax, which is EBIT into 1 minus T. EBIT into 1 minus T, that is NOPAT, minus capital charge. And definition of capital charge is WACC multiplied by average capital employed. WACC, 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 weighted average cost of capital multiplied by average capital employed. Multiplied by average capital employed. So if 2 years balance sheet is given, you can find out capital employed average for both the years, and then average capital employed multiplied by cost of capital. Weighted average cost of capital, and you get capital charge. So capital charge deducted from NOPAT will give you EVA, economic value added. EVA has to be positive because positive EVA indicates value creation. Negative EVA indicates value destruction. Remember this for fill in the blank. You can write down also positive EVA indicates value creation. Positive EVA indicates value creation, whereas negative EVA indicate value destruction. Negative EVA indicate value destruction. Positive EVA indicates value creation, whereas negative EVA indicates value destruction. So we should always create value. We should not destroy the value of the firm. Through our strategies, management always ensures that through its strategies, through its action plan, it always creates value and it does not destroy the value. Yeah, so this concept of EVA is what is the extra value addition made by the company out of its business operations during the year. What is this extra value addition made by the company out of its business operations during the year? Now that is EVA, and positive EVA indicates value creation, negative EVA indicates value destruction. All of you have written this. Also you have written the formula for EVA. It is NOPAT, net operating profit after tax, minus capital charge, and capital charge is WACC into capital employed. Now each of these figures, each of these variables, you may have to find out independently if it is not given. If WACC is not given, you have to find out WACC. Capital employed not given, you have to find out capital employed. NOPAT not given, you have to find out NOPAT. In short, individual element you have to get independently by preparing working notes and get the EVA. Now these are computational sums. Just now we did question number 6B, which was on calculation of intrinsic value of equity share, and 2 students got the answer correctly, 75 rupees. So this question 8A is also on computation of EVA, again a computation sum. So I will always grab the opportunity to solve questions on which are computational sums, compute, calculate, direct bullet questions, and therefore the road is clear, the approach is clear. I know how to calculate the EVA. Now you are given the balance sheet of Redshine Limited. Any doubt you have on this? Please ask questions on conceptual understanding of EVA. The concept of EVA was first given by Stern and Stewart for MCQ for fill in the blank questions. Party, who is the generator of this concept of EVA? Who has coined who has coined the concept of EVA? Right, 4 options are given: Portal, Boston, Ernst & Young, and 4th one is yes, this is EVA, economic value added. Who has given this concept? Just now I said. Is it Ernst & Young? No. Then yes, Subhadra, please write in the box, chat box. Stern and Stewart. You heard Stewart. Yeah, Stern and Stewart. वो Ernst & Young जैसे लगता है, but it is not Ernst & Young. It is Stern and Stewart. STERN and Stewart. They coined. Thank you, Sumadra. They give the concept of this EVA, economic value added, And today at the time of performance appraisal, even the boss, the supervisor, the manager also asks the subordinate, what is your value addition during the year? If you have been doing your routine operations without fail, without any delay, etc., that is not a great thing. Because when you are paid such a huge salary, corporate salary, you are expected to do the work what has been assigned to you. So nothing great if you are doing the routine work. But if you go out of the way and do something which is extraordinary, which adds to the profitability of the organization, which streamlines the operations of the organization, that is called value addition. I repeat, if you as a manager go out of the way, do out of box thinking, and do something whereby you add value to the organization's profitability, that means contribute to the profitability of the organization or streamline these operations, its operations, then that is called EVA, economic value added. And each business unit, SBU, strategic business unit, is looking for EVA, value addition to its business during the year. So the business unit which has higher EVA is obviously rewarded. EVA is used as a basis for performance appraisal and for calculation of performance bonus. Right? These are all theoretical tips or points I'm giving it to you. In case you are attempting a theory question on EVA, then yes, you can write all these things and write the answers to theory questions also in bullet points. So don't go for giving the definition at final level. We don't appreciate giving the definitions, etc. in detail, right? Because then you have to mug up, you have to remember or by heart the definition. Not expected. I will write 8-10 bullet points on EVA. Bullet point 1, the concept of EVA was coined by Stern and Stewart. Bullet point 2, EVA, economic value added, throws light on or indicates value addition made by the company out of its business profit during the financial year. Made by the company out of its business profit during the financial year. Number 3, when you have decentralized concept in the organization where each SBU is considered as a profit center, each SBU is considered as a profit center, obviously economic value added is computed for each SBU. And the SBU which generates higher EVA obviously is considered to contribute a major share to the profitability of the business and therefore is rewarded. So EVA is considered as a base for calculating performance linked incentive, performance linked bonus, efficiency bonus or incentive is paid on the basis of EVA. EVA is used as a parameter for carrot and stick approach. Those who have generated negative EVA during the year, or if the EVA has deteriorated over the years, has reduced over the years, then that manager is penalized. Manager is punished, you know, he is answerable, questioned, he is questioned, he has to justify why EVA has come down. So negative EVA indicates value destruction, positive EVA indicates value creation. देखो कितने पॉइंट्स मैंने EVA के बारे में बताए. How can you enhance EVA का फॉर्मूला लिखो. EVA is NOPAT minus capital charge, NOPAT minus into bracket WACC into capital employed. You know, सामने वाला बोलेगा अरे कितनी बात कर रहे हैं, how much are you writing, it is only 5 marks, I can just go on and on till the time I finish everything what's in my mind, right? So that the examiner has to give me 5 on 5, 6 on 6, nothing I will keep in my mind, everything I will on EVA. How to enhance EVA? Stern and Stewart have given 4 strategies to enhance EVA. All this gyan is there in your module. Go through the module, you will understand what I am talking. 4 strategies, management strategies given by Stern and Stewart to enhance EVA. These strategies revolve around that expression and therefore concentrate on the expression. NOPAT minus capital charge. So first strategy is status quo. Status quo means as is where is basis. As is where is basis. Don't do anything, right? Ensure that the existing investments, the amount invested in business, capital deployed in business, use polished business English in theory questions. I've been telling you from day one, use polished business English, financial jargons in your communication. So you are talking about how to enhance EVA. First is status quo, that is as is where is basis. Don't do anything, just ensure that existing capital deployed in business, generates reasonably high rate of return. Every word should be used properly, cautiously. You know, the investment made in the business, capital deployed in business Funds employed in business must generate adequate, reasonable rate of return which exceeds cost of capital. Thumb rule, which exceeds cost of capital. Investments made in the business, existing investments made in the business should generate adequate return, should generate reasonable return which exceeds the cost of capital. That is called status quo. That means don't make a single rupee investment, existing investment only you deploy in such a manner that ROI is greater than WACC. ROI is greater than WACC. हो गया? आप आपकी स्टाइल में लिखो, मैं बिल्कुल नहीं बोल रहा हूँ. You have to use the same language. You write in your own words, but this meaning should come out of first point. Second is grow with profit. Second strategy given by Stern and Stewart: grow with profit. Every organization is optimistic and looking for growth prospects. Nobody is looking for stagnancy. Last 8 months during pandemic, we all are stagnant. You know, the business houses have become stagnant, no growth. But in normal circumstance, every organization looks for optimistic growth, some sort of growth in its business. So growth with profit. That means every additional investment made in business, right, should ensure that it generates incremental return which is higher than incremental cost. That means funds which you are raising for making that investment should have the cost which is lower than the return from the investment. So every additional investment which you make in business, every rupee invested in fixed assets, in installation of machinery, in installation of capital investment, capital asset, should generate adequate return greater than cost of capital, right? We are into business and not into charity. So every rupee invested, we are into business and not into charity. So every rupee that is invested in business must generate a return. Otherwise, why do I invest in that asset or invest in that equipment? That should be the question. This strategy is called growth with profit. This is not given by Deepak sir. These strategies are given by Stern and Stewart. So don't forget to write on the top, according to Stern and Stewart, comma, EVA can be enhanced by the following management strategies. Number 1, status quo. Number 2, growth with profit. Number 3, overhaul. Overhaul is creating a turbulence. This word is used in engineering. Overhauling the machines, lubricating the machines to reduce the cost on account of repairs and maintenance, to prevent the machine breakdown. We use this overhaul in context of oiling, engineering, oiling of machines and so on. So overhauling in the business, that means creating turbulence. Withdraw your investment from non-profitable ventures and invest in profitable ventures. That means mergers, acquisitions, takeovers, acquisitions, strategic alliances, foreign collaboration, etc., etc. All the joint ventures you can talk about. Create turbulence, restructuring of business. That is called turbulence. Turbulence means जो business चल रहा है उसमें कुछ तो उछल होनी चाहिए, कुछ तो हलचल होनी चाहिए. That is called turbulence. So restructuring of business in such a manner that organization benefits out of synergy gain, out of restructuring of business. So this turbulence is called overhaul in the words of Stern and Stewart. Third strategy to enhance EVA. Right? And we always know that when we acquire any running business of another firm, there is a synergy gain, 2 + 2 = 5, and therefore EBIT increases. EBIT from the new business obviously is higher than the EBIT of the existing business. The fourth strategy is reduction in financing cost. Reduction in financing cost. That is the fourth strategy to reduce, to increase EVA. Here, financing cost has to be reduced. So now the author has targeted this capital charge. If we keep our capital charge within control, that means if we reduce the financing cost, then obviously EVA will enhance. Our objective should be to enhance the EVA. How can we do that? By minimizing the financing cost. How financing cost can be minimized? By exploring different options of raising the fund. Fundraising options, that is the job of the finance manager, to explore various opportunities of raising the funds in such a manner that cost of capital is maintained under control. Particularly cost of debt financing should be always under control. So there is a strategy called CDR. In SFM, you have studied CDR. CDR stands for corporate debt restructuring. Corporate debt restructuring, DEBT, corporate debt restructuring. The debt which carries higher rate of interest should be retired, should be repaid, should be prepaid, so as to take advantage of decline in the rate of interest in the market and substitute the existing date with the new date carrying lower rate of interest. This is called CDR. CDR is a regular activity of the finance manager, the treasury manager. So why not explore these financial options of reducing the financing cost so that EVA enhances, right, etc etc. देखो मैं कितनी बड़बड़ कर रहा हूँ, how much I am talking on EVA. If it is a 10 mark question, I will expand the answer. मैं मेरा पसारा बढ़ाऊंगा क्योंकि 10 मार्क का क्वेश्चन है. If question is for 5 marks, I will condense it. That much maturity we as professionals must have. Always write in commensurate with the weightage given to the question. Always write your answer in commensurate with weightage. 5 mark question के लिए मैं इतना पसारा क्यों बढ़ाऊं? I will also be selfish. I will write only to the point, and I will write only 4 title strategies. That is first one is status quo, second one growth with profit, third overall, and fourth one is reduction in financing cost to enhance the EVA. You know, all this preparation you have done, but you may be surprised to know in the exam there is no question on EVA at all. That is also possible, right? I told you, no, there are 25 plus topics in the syllabus and all are competing with one another. Which question should find its place in the question paper? That you and me, we cannot dictate, right? And therefore some topics are not given any importance, no coverage at all in the question paper. Don't say it is my bad luck. Say that, all right, I am ready to face any situation, whatever I come across, and be prepared for all such uncertainties. So there have been occasions where there have been only theory questions on EVA. There have been occasions when numerical question of 10 mark where complete balance sheet income statement given and calculate EVA, or third case where no question on EVA at all. ऐसे भी possible है. But we can't give it up. We have to study thoroughly, and therefore let us look at question number 8A from December 19. Meanwhile, any questions you have on EVA? I'll take 2 minutes pause. You can ask me questions. I'll wait for 2 minutes. Meanwhile, you go through this question which is in front of you on the screen. All right. So that means there are no questions on EVA. I may take it. I have explained so well that there are no questions on EVA. Good. Still, if you have any questions, you can ask. Yeah, I will look at this question. You are given the balance sheet of Redshine Limited as on 31st March 19. Yeah, balance sheet is given in normal vertical form, Schedule 3 format, right, as per Companies Act, and therefore you have all the detailed description of the assets, non-current assets. Look at property, plant and equipment, 250 crores. Figures are in crores. While solving the question, you can pick up the figures as they are, rupees in crores, or you can also convert it into thousands as you wish. But if you keep on converting into thousand, chances of making mistakes, errors, and therefore be careful. Intangible assets, financial assets, that is investments. These are securities, investments in securities, other non-current assets like advances. Then current assets, we have inventory, trade receivables, cash and cash equivalents, other current assets. You have equity and liabilities, equity share capital, face value ₹10, other equity, that is reserves and surplus 325. I am reading the balance sheet contents. Non-current liabilities, you have 12% redeemable preference shares. Borrowings, financial liabilities. Then you have current liabilities, as usme again financial, trade payables and other financials, provision and other current liabilities. You have seen how much in detail the balance sheet is given to you. And below the balance sheet, there is statement of P&L given to you. That is also very elaborate, right? So complete financial statements are given and आपको EVA calculate करना है. Revenue from operations 1890 crores. Interest and dividend income on non-current financial investment. All of you know this is investing income, and that is 250 crore. Minus COGS, cost of goods sold, other operating expenses. So you get profit before interest and exceptional items and tax. Less interest, so profit before exceptional items and tax. Less exceptional items, profit before tax, tax and PAT. Yeah. Now, when you are calculating EVA, you have to take into account no PAT, net operating profit after tax, which is profit before interest and after tax. Now, keep this in mind. From the above information, determine EVA, economic value added, of Redshine Limited for the financial year 18-19 if its WACC is 15%. Fortunately, WACC is given. So you apply this WACC of 15% to capital employed. So capital employed आपको calculate करना पड़ेगा. Capital employed is nothing but share capital plus reserves plus long-term debt. Share capital plus reserves plus long-term debt. That is capital employed. So calculate capital employed from the balance sheet. Apply 15% on that capital employed, and only 1 year data is given. So question of calculating average capital employed does not arise. Only 1 year data. So only closing capital employed you can calculate. I repeat, share capital plus reserves plus long-term debt is called capital employed, and uska 15% is capital charge, right? WACC applied to capital employed is capital charge. Subtract it from NOPAT and calculate EVA. I give you 5 minutes time to calculate this EVA. Please practice these questions. Don't wait for me to discuss the answer, or don't wait for others to get the answer. You will be at a loss, because you have to practice these questions. Unless you practice, you will not get confidence. When I read the answer, I get an impression that yes, it's so simple, I get to know. But are you in a position to solve this independently? Question mark. That is a question which you have to finally answer in the exam, and therefore practice it. Whenever you are studying any topic, practice this question, solve it yourself. I'm not saying be methodical, write down in detail. Rough calculation will do. A quick calculator calculation will do, but then just get a hang of these figures. So I wait. You calculate capital employed, then capital charge. These are all working notes. Then NOPAT. NOPAT is profit before interest after tax. If you wish, the screen is in front of you. You can take a pic. Take a pic of this screen. Take a picture of this screen so that the figures remain in front of you. Yes. After this, I will show. Have you taken the pic? After this, I will show you the P&L account. There is one query which has come. Capital employed can be total assets less investments less total outside liabilities. Yes, Vinaya, absolutely correct. Vinaya is asking, can we calculate capital employed as total assets less investments less total outside liabilities? Yeah, it comes to one and the same, whether it is share capital plus reserves plus long-term debt, or total assets less investments less outside liabilities, one and the same. Yeah, Purvi has already calculated capital employed. She got the answer 490. Yeah, Purvi, wait for others to complete, then only we can comment. Capital employed aa gaya, to capital charge nikalo, NOPAT nikalo, and then EVA. I also feel that this is a very bonus question of 10 marks that at final level they have given in December 19 two bonus questions. One is 10 mark EVA, which we are solving now, and 8 marks ka calculation of value of equity share, which we just did just now. Yeah, so ye to, and baki sub questions were on mergers and acquisition. Yeah, so obviously
So your voice is not audible. Sir? Are you there? Deepak sir?
गुजराती दिवाली कुटुंब मेड़ो
Deepak sir?
Okay, am I audible?
Yes, sir, you're audible.
Yeah.
But I can't see you. Your face, I can't see you.
Yeah, camera is starting.
Yes, yes. Okay, sir.
Fine.
Yes, sir.
Okay.
You can start, sir. No problem.
Hello.
Yes, sir.
Yes. Control part. Start. Aditi madam,
Yes, sir.
hello. You will, I want to enlarge the screen. Share screen option.
So you go to share screen option, sir.
View in full screen mode. Okay, okay, fine.
Yeah, yeah.
Fine. You can see the full screen now.
Screen is
visible, right?
actually to be seen. Yes, sir. It is visible. Equity and liability is something. Yeah.
Yeah, correct. It is
The
visible.
balance
No?
sheet.
Okay.
Balance sheet
Okay.
is there.
Okay. Okay.
So just scroll and just see that it is working or not. Because here the scrolling is not going on. We cannot. I think the page is stuck over there.
Page is stuck. That's what I'm saying.
Page is stuck.
Page is stuck. You are right.
Yeah. Start again. Start again, sir.
Start again means I will close this and start again.
Close this. Yes, sir. Close this and start again.
सॉरी कौन कम कल मोहनथाल बनाया था और घुघरा बन गया
No, screen is
your video your screen is paused from here where I can see. It shows that your screen is paused.
Yeah, but I have not paused the screen.
I don't know, but I think it has got stuck, sir.
That's what.
Can you restart all over again? By closing all the tabs.
Yeah, okay, I don't mind. Okay. Webcam zoom 62%. Waiting to view the screen. That's what comes now. Okay, I'll
Yeah,
start
because
from-
already one screen is already there wherein I can see the
But
balance sheet.
I will start from scratch. Don't worry. I'll close and start.
Yes, sir.
Yeah.
Yes, sir. Okay.
That's so funny. Yeah, easy was enjoying question. मजा आता है करने में. Last year भी बासी है ना. नहीं दिवाली तो पहुंच गए थे.
Hello. I'm audible.
Yes, sir. Yes, you're
Yeah.
audible.
But screen is moving now.
No, sir. The screen is not moving. The last screen that got stuck, it is stuck over there only.
Your recordings that need to be converted. Convert the recording. No, that is not my job. No, no. See, I get normally so many options. No, here there are no. You can call up, sir. No, Virak sir, madam. Is Virak sir there around? Hello. Hello, Aditi madam.
Yes, sir. I'm calling him up. I'm talking to him.
Okay, okay. Tell him that screen is not moving. Yeah.
Yeah, sir. I'll talk to him about it.
पता नहीं कोई करता होगा तो
हाँ सर, ये जो स्क्रीन है ना, जो दीपक सर बता रहे थे, वो स्टक हो गया है एक जगह पे। और वो जो स्क्रीन अभी क्योंकि उनका इंटरनेट का एरर था, तो अभी वापस जब भी लॉग इन करके वापस से चालू कर रहे हैं तो वो स्क्रीन हट नहीं रहा है। तो कैन यू हेल्प विद दैट?
ये शो माय स्क्रीन आ गया, देखो।
ठीक है, ठीक है, ठीक है।
Now he has.
थैंक यू सो
Now
मच।
he has given the access
हाँ.
now.
Yeah,
All is
thank you so
controlled. Yeah, all is controlled by him, no?
Yes, sir. It is all controlled by him.
Correct. So we were trying
Yes, sir.
unnecessarily from here. He has to give the share screen
हाँ.
access. That share
Yes, sir.
screen
He
access.
has to give the access.
He has to give the share screen
Yes, sir.
access. Okay, okay.
Yes,
I'll
sir.
continue. Yeah. Okay.
Okay.
I will.
Go ahead.
Yeah. Thank you. So NOPAT is 1155. His capital charge is 343. EV is 812. Vinaya has already calculated, and sorry, wrongly stated. That's what Vinaya said. Anyway, Vinaya, I will first share the question. Yeah. Now I think it is visible to all of you, and it is moving as well.
Yes, sir. It
Yeah,
is
correct.
visible.
Moving
Yes,
as well. Yeah. Correct.
Yeah.
So you have, yeah, correct. You have the balance sheet of company given to you. You take a quick peek of this, and income statement is given. And now you have to calculate the EVA. So let's see the approach. Directly, we will look at the approach. Calculation of NOPAT. Profit before exceptional items and tax, it is 481. That is profit before exceptional items, 481, picked up from the question. Add interest, because we have to take profit before interest after tax. NOPAT is nothing but profit before interest and after tax. So you have profit before exceptional items 481. This is before tax also. So you have to add interest, and 9 minus non-operating income. This profit includes non-operating income like interest, dividend, that has to be deducted, 250. And what you get is operating profit. Operating profit after tax, and therefore minus tax at 30%, 72. Your NOPAT is 168. So what we have done is profit before exceptional items 481, plus we have added 9. 481 plus 9 minus 250. You can look at the question again. 481. Profit before exceptional items 481. 481 is the profit before exceptional items. We have added interest. Why have we added interest? Because it is non-operating expense, right? Non-operating expense. So we have, this is profit before interest, exceptional items and tax minus interest. So interest is a non-operating, it is financing, and interest is investing activity. When it is interest received, when it is interest paid, it is financing activity. This is interest paid and therefore financing. That is non-operating, and therefore we have added back. 481 is profit before exceptional items and tax plus interest 9, right? But you have to also deduct, right? Other income. Other income is 250. Here, interest and dividend income, this is investment income. So investment income we have deducted, and financing expense we have added back. That is 9 we have added back, and 250 we have deducted. Look at the approach again. So therefore 481 plus 9 minus 250, you get operating EBIT minus tax 30% is 168. Please confirm in the chat box that you have understood calculation of NOPAT. Please confirm in the chat box that you have understood the calculation of NOPAT. 168 is understood. Okay, fair enough, fair enough. Yeah. How did you get NOPAT of 343? There was some mistake, is it? You made a mistake of some people calculated NOPAT. Okay, all have understood NOPAT. Thank you for your feedback. Thank you. Thank you. Now we calculate capital employed, operating capital, because you have to calculate capital charge. So operating capital is equity share capital 500 plus other equity 325 plus 12% redeemable preference shares, financial liabilities, that is borrowing 75, less non-operating assets, that is financing assets, financial securities, and that is 75. So that has been deducted. You can see that from 490 you have deducted that. So 490 minus non-operating asset, financial asset, investment 75, so 415. So operating capital is 415, and they have calculated EVA. EVA is calculated in terms of percentage, but you can apply it rather than doing like this. You can take straight away 15% of 415. 15% of 415, and that you can deduct from NOPAT. NOPAT is 168. So rather than saying 168 upon operating capital 415 and then saying that it is 40.48%, other formula could be from NOPAT you deduct capital charge. So operating capital 415 multiplied by 15%, 415 into 15%, you deduct from 168 and you get EVA as 105.74. So this was such a simple question of 10 marks. Only basic calculations you have to understand. Itni lambi chodi balance sheet, P&L account given, but only certain figures were relevant. Certain data was relevant out of that, and that's what you have picked up. So operating capital, ultimately we are applying WACC, weighted average cost of capital, to the capital employed. And capital employed, I told you, is share capital plus reserves plus long-term debt. So long-term debt means, that's what I said, share capital mein equity and preference both have been taken. Even if preference is not taken as part of share capital, you can take it as a part of long-term borrowing. So long-term borrowing mein borrowing bhi aayega, preference share bhi aayega, other equities, reserves and surplus and equity, that is 490. And minus, don't forget to deduct non-operating assets. You know, sometimes students forget this 75 and they say 490 is my capital employed. No, minus non-operating assets 75, financial assets, it is given investments. Investment is your non-operating asset, and therefore income from investment is also non-operating income. We say it is investing income. So 415 is your capital employed or operating capital employed, and that operating capital employed 415 into 15% will give you capital charge. 168 minus capital charge will give you 105.74. So EVA is 105.74. Please confirm that you have understood this. 105.74 EVA. Please confirm in the chat box that you have understood. 15% how, Vinaya? That is given in the question. 15% is given in the question. Okay, 15% is given. WACC is given in the question, Vinaya. Did you understand? Okay. Did not deduct 250. Vinaya says did not deduct 250. 250 is what? Vinaya, have you understood 15%? Okay, okay. And 105.75. Sumadura gets 105.75. Yeah, correct. 250 you did not deduct. Vaibhav is saying you did not deduct 250. 250 kahan hai? 250 is, oh, you mean to say in NOPAT, while calculating NOPAT you did not deduct 250. That is what you are saying. Fine. So these are small pockets where chances of making mistakes, and therefore ensure that you get the 250 here. Non-operating income 481 plus interest 9 you have added, but minus non-operating income, net operating profit after tax. So operating profit calculate karne ke time non-operating income has to be deducted, right? Because this is bottom line, profit before exceptional items. All right, so 250 also you understood now. So everyone has understood this problem. Please confirm. 250 of other income, correct. So EVA calculation, I hope everyone has understood. Shall I proceed with questions on mergers and acquisition now, which I have been talking right from the beginning, that is occupies 30% weightage or 30 marks in the syllabus. Vinay says still I cannot see 15%. Okay, Vinay, I will take you to the problem again. 1 minute. I take you to the problem again. You see here, last line, if its weighted average cost of capital is 15%, I have highlighted it. From the above information, determine EVA, economic value added of Redshine Limited for financial year 18-19 if its weighted average cost of capital is 15%, 1-5. Can you see that, Vinaya? It's okay. Okay, fine. You have to read the because without capital cost of capital you cannot work out EVA. Yeah, so one question on EVA is more than enough because all assorted practice we are doing in today's class. So therefore now we look at questions on mergers and acquisition. So I am moving further. I'm going to this question number 7B, right? A is already done, where 5 questions are asked and each question carries 2 marks. 5 into 2 equal to 10. Following information is provided relating to the acquiring firm Mark Limited and the target firm Mask Limited. So Mark Limited is acquiring firm, that is taking over, and Mask Limited is being taken over, that is a target firm. You know, in mergers acquisition, a company which takes over other companies called acquiring firm, and company which is being taken over is called target firm. Okay, so Mark Limited is acquiring and Mask is target company. PAT is given to you, number of outstanding shares is given to you there, and PE ratio is given to you 10+5. So immediately you can calculate EPS, earning after tax, upon number of shares outstanding. See, these questions are pretty simple. They are not tricky at all. That's what I'm saying. Even questions on mergers acquisition are very simple. If your understanding of financial management is clear, basic concepts in FM financial management is clear, then you can tackle these questions very well. There is no problem. So PAT divided by number of outstanding shares, you will get EPS. So 2000 lakhs upon number of shares 200 lakhs, you will get 10 rupees as EPS, and 400 upon 100, 4 rupees is EPS of Mask Limited. Once you get EPS and PE multiple, you can get market price, which is EPS into PE multiple market price. So question is, what is the swap ratio? Swap ratio is exchange ratio based on current market price. Directly also you can work out, either 10 rupees is the EPS, here 4 rupees is the EPS. Yeah, 10 rupees, 2000 upon 200, 10 rupees is the EPS. 10 into 10 is 100 rupees is the market price of Mark, and 4 rupees EPS into 5, 20 rupees is the market price of Mask. So 100 is to 20 will be the swap ratio based on current market price. 100 is to 20. That means for every 5 shares of Mask Limited, 1 share of Mark Limited will be given. 25s are 100. So for every 5 shares of Mask, 1 share of Mark will be given. That is the swap ratio. 1 is to 5, something like that. Let's see the answer. Like that, step by step, you have to get the answers. Yeah, basic questions these are. See, A, B. Now, no need to solve. You can understand from the module, from the suggested answer itself, that 2000 upon 200 is 10 rupees EPS. Mask has 400 upon 100, 4 rupees EPS. Market price is 10 into 10, 100. So, and 4 into 5, 20. Therefore, swap ratio based on current market price is 20 upon 100, 0.2, or 1 share of Mark for 5 shares of Mask. Like that, it is better to write in narrative form rather than saying 1 is 1:5 दिख रहा है या 5:1. Why don't you write 1 share of Mark for 5 shares of Mask? Simple. That means only limited number of shares of the acquiring company given for more number of shares of target company. So number of shares to be issued will be 100 lakh multiplied by 0.2. That is 20 lakh shares will be issued. And that is from the given data. See, 100 lakh is the number of shares outstanding of Mask. And for every 5 shares, 1 share given. So for 100 lakh, 20 shares will be given. So next question is, what is the EPS of Mark Limited after acquisition? Now EPS, earning after tax after acquisition, will be 2000 plus 400. Mask का जो PAT है, that will become PAT of merged entity. So 2000 plus 400, 2400 will be the PAT of combined entity, divided by number of outstanding shares. Mark के खुद के 200 lakh share है, plus for 100 lakh it has issued 20 lakh shares. For 5 shares, 1 share issued. So for 100 lakh, 20 lakh shares issued. So 200 plus 20, 220 lakh shares issued. So 2400 upon 220. That is the answer for second part. Please ask me questions if you don't understand. 2000 plus 400. See, EPS after merger is 2000 plus 400, 2400 divided by 200 plus 20, 220. So answer comes to 10.91. This is EPS after merger. The next question is, what is the market price of the share of Mark Limited after acquisition, assuming P ratio of Mark remains unchanged. P ratio of Mark remains unchanged, that is 10 after acquisition. And earning per share after acquisition, just now we calculated 10.91. So 10.91 into 10 will give you, see, approach 10.91 into 10, you will get 109.10. That will be the expected market price. आपको 6 mark मिल भी गए. You have attempted 3 questions, sub questions, each sub question carrying 2 marks. Such a bonus simple question. Actually, it is basic financial management question. Basic financial management. What is the EPS of the merged entity? What is the market price of the share post merger, post acquisition, वगैरह. You know, you try to address the question according to the content of that question. Try to address the question accordingly. So अभी third part में expected market price पूछा है. So 10.91 जो आपका second part में आया, EPS after merger multiplied by P multiple 10 times remaining the same. Fourth
So your
part में
screen
पूछा,
has again got stuck. Your screen is again stuck. And even I cannot see your face. That is
Oh.
also gone. Yes, sir. There is slow network. It could be seen that the network is very slow.
no, but I can see the questions of the students. It's working.
Yeah, but
Vaibhav
then
and all. Maybe your network may have a problem because all students are writing no issues, sir. It is working.
it is working.
All students are writing. Yeah, it's working. And
Because
screen
yes,
is also moving.
Screen is also moving.
Yes. Yeah, we can
Okay.
see screen is moving. Students are.
Okay, fine. Okay. So it is my problem. Fine.
Yeah.
Yeah,
Because
it is my
network.
problem. But
Yeah,
I
there is no.
just thought that there should be no problem to the student. That is
No,
why I
there is no problem in the network. Yeah, my network is full. So market
Okay.
value of the merge, yeah, no problem. Market value of the merged firm. चौथा question पूछा है. What is the market value of the merged firm? Market value of the merged firm is expected market price after merger, which is 109.10 multiplied by number of equity shares, 220 lakh equity shares. So 109.10 multiplied by 220. Yeah, lakh share. 200 will be its original share and 20 lakh new shares issued. So 220 lakh into 109. You see the calculation on the calculator, 240.02 crores. That is the market value of the merged firm. 240.02 crore. So पहले 4 question तो कितने simple थे बोलो. Swap ratio based on current market price, then EPS after merger, expected market price after merger, and then expected market value of the merged firm. All 4 parts were very simple. Now look at the 5th part. Look at the 5th part of the question. What is asked? Calculate the gain or loss for the shareholders of 2 independent companies after acquisition. Calculate gain or loss for shareholders of 2 independent companies after acquisition. That means how shareholders of Mark Limited are benefited or have they lost, gain or loss, and same way shareholders of Mask Limited. So you have to basically compare the market price of the share pre and post merger both ways. So look at the gain or loss. Difference between the post merger market value and pre merger market value. Post merger market value we arrived at 240.02. Market value of the merged firm is 240.02 minus pre merger market value. Pre merger market value is 220. ये 220 कैसे आया? Pre merger market value you can see on the top. Pre merger market value 220 rupees is the pre-merger market value total we are talking about. When you do the valuation of both the businesses, here it is. $220 lakh shares are issued of 10 rupees. Yeah, 220 lakh shares totally issued. So rupees 220. Figures are in crores, 220 crores. So 240.02 crore market value of the merged firm minus 220. So 20.02. और उसका breakup क्या होगा? See, appropriation of gains from merger is like this: Mask and Mark. Now Mark is post merger value minus pre-merger market value. Pre-merger market value is 220, 220. You all understand, no, how 220 has come? This is 200 lakhs shares issued, shares of Mark Limited, and 20 lakh is shares issued to Mask Limited. So pre-merger it was 20. You can see number of shares are given in the question. Number of shares are given in the question. 200 lakh and Mask ke hai 100 lakhs, right? And they are given 20 share. So pre-merger it was 220. So it is 220 that way, pre-merger market value. And post-merger market value, they have calculated post-merger market value on a standalone basis. Say expected market price of per share is 109.10, 109.10. Right now you look at in isolation 109.10 into 200. So kitna aega? 2 9s are 18 and 2 1s are, yes, 218 minus 200. So 18. 18.20 is the gain to the shareholders. 218, 109.10 multiplied by 200. 109.10 multiplied by 200 number of shares. That is 218.20. That is the Mark Limited's post-merger value. And Mask Limited's, they got 20 lakh shares. So 20 lakh shares against the value is as per this 109.10 multiplied by 20 lakh shares. So 109.10 multiplied by 20. You will get in crores 21.82. Just calculate yourself and confirm, get confirmation for these figures. You have to show and you have to prove that the total gain out of this merger is assigned or is attributed to both the companies like this. 20.02 का breakup है, 18.20 crores rupees benefit to Mark and 1.82 crore benefit to Mask shareholders. That means it is win-win situation out of merger. Win-win situation. Shareholders of both the companies are benefited because of merger. Yeah. This is the fifth question, which is generally tricky. Fifth question is generally tricky. Any doubt you have in any of the figures, you can ask. Yeah. 24,002. Vinaya, what is this 24,002 you are getting? 24,002. What is this 24,002? That is 240.02. No, correct. That is what 24,002. Figures are in crores. 240.02 crore. Correct. Minus 220. Get yourself convinced. Each one of you, please confirm that part 5, fifth part you have understood. I'll wait for 2 minutes for you to confirm to me that fifth part you have understood. Write in chat box. Write in the questions that you have understood the fifth part. First 4 parts absolutely straightforward. No issues. First 4 parts. Fifth part is generally, and that is the catch, that's the challenge generally in the fifth part. Calculate gain or loss from the merger, and that too assigning, attributing it to both the company shareholders. So total gain is 20.02 broken up or divided into parts, benefit to Mark and benefit to Mask, and 18.20 plus 1.82 comes to 20.02. See 200 lakhs multiplied by 109.10, 218.20. And 20 lakh multiplied by 21.8, 20 lakh multiplied by 109.10, 21.82. So that is post-merger value minus pre-merger market value will be number of shares 220 multiplied by market price per share. The face value is 10. You can see the market price we have worked out. Market price is 120. So 100 se multiply karo 200 ko. 200 lakh shares into 100, right? And similarly market price is 20 for Mask. So pre-merger market value is 20 multiplied by 100, 20 crores. Market price pre-merger into number of shares pre-merger. Market price pre-merger into number of shares pre-merger will give you for respective companies pre-merger market value. And post-merger market value is 109.10 multiplied by the outstanding number of shares. That's how you will calculate. I want confirmation from all of you. Only Vinaya has confirmed. What about others? MV of firm. Yeah, correct. What about others? Have they understood? Please confirm in the chat box. Sumadura is confirmed. What about others? Every one of you need to confirm. Vaibhav done. Okay, Shreya Datta done. Okay. I should get a confirmation that you have understood part 5. Okay, fine. Okay, so we have completed this question also on mergers and acquisition, and You can see this is end of the question paper. Question paper is over. But this is one question of 10 marks we have solved on merger acquisition. In the same paper, there are 2 more questions of 10 mark. Total 30 mark weightage on mergers and acquisition. And balance one was on EVA and other one was on valuation of equity share. Yeah. So we have completed question number 8. आपने देखा होगा question number 8 was numerical. 7 is numerical. 6 is also numerical. Yeah. So look at now first question number 7 is A. We will look at first. All questions were on mergers acquisition only. Yeah. Look at this question. ST Limited and B Limited are in the same industry. 6A we are doing. Please pay attention. 6A. We are doing question number 6A. ST Limited and B Limited are in the same industry. The former is in negotiation for acquisition of the latter. That means ST Limited is acquiring B Limited. Important information about the two companies as per the latest financial statement is given below. Rupee 10 equity shares outstanding, 10, 12 lakh and 6 lakh. Yeah, so these are number of shares outstanding of rupee 10, 12 lakh and 6 lakh. Date 10% debentures given 580. 12.5% institutional loan taken by B Limited 240. So earning before interest, depreciation and tax 400.86 and 115.71 and market price per share given as 220 and 110. ST Limited plans to offer a price for B Limited business as a whole, which will be 7 times EBITDA, 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 earning before interest, depreciation and tax, reduced by outstanding debt to be discharged by own shares at market price. I read this is very crux of the question. ST Limited plans to offer a price for B Limited. That means purchase consideration, what we call, will be paid, a price that will be offered for acquiring the shares of B Limited for the entire business that is being taken over, which is equal to 7 times EBITDA reduced by outstanding debt. B Limited का जितना EBITDA होगा उससे debt reduce करने के बाद whatever is the balance, 7 times of that to be discharged by own shares at market price. So ST Limited will issue its own shares at the current market price of 220 rupees, which is equal to 7 times EBITDA minus outstanding debt. This is the formula of acquisition in this question. B Limited is planning to seek 1 share in ST Limited for every 2 shares in B Limited based on the market price. Right? You can see market price is 110 or 220, exactly double. Market price of ST Limited is exactly double that of B Limited. So B Limited 2 shares is equal to 1 share of ST Limited. A tax rate for 2 companies may be assumed as 30%. All right, what are you required to calculate? Calculate and show the following under both the alternatives, ST Limited's offer and B Limited's plan. See, 2 companies have given 2 different plans. ST Limited wants to offer the price which is equal to, offer number of shares which is equal to 7 times EBITDA minus outstanding debt to be discharged by its own shares at market price. Whereas B Limited wants to seek 1 share in ST for every 2 shares in B based on the market price. So B Limited's contention is market price, whereas ST Limited is looking at future business opportunity. So दोनों company के philosophy में फर्क है. The way in which purchase consideration is being discharged, there is a difference. So calculate and show the following under both the alternatives. So every time you have to discuss under both the alternatives following things. Net consideration payable. So calculate net consideration payable by ST Limited to B Limited as per ST Limited's plan and as per B Limited's plan. ST Limited's offer bolte hai and B Limited's plan. Number of shares to be issued by ST Limited. Second, EPS of ST Limited after acquisition. Expected MPS after acquisition. And state briefly the advantages to ST Limited from the point of view of acquisition. Calculate except EPS may be rounded. Calculations may be done up to 2 decimals in lakhs. May be rounded up to 2 decimals in lakhs. So 2 decimals that you can round up very categorically given. So all answers have to be correct. And all answers have to be the same. You cannot say that my answer differed because of rounding off. The rounding off के लिए उन्होंने criteria दिया है You may round off up to 2 decimals and that too in lakhs, right? That's all. Okay. First part we will calculate net consideration payable. I will not, go to the answer. I want all of you. बस data इतना limited 12 mark का question पूछा है. इतना limited data है and you have to calculate what is consideration payable by ST Limited to B Limited as per its offer, which is 7 times, and also as per B Limited's plan. So हर एक में दो answer आएंगे as per ST Limited's offer and as per B Limited's plan. I wait for 2 minutes for every one of you to get me the answer to the first part, consideration payable. And this is the data which is in front of you, ST and B. Please write to me in the questions once you get the answer to the first part. Data is in front of you and therefore you can get the answer. Shreya Datta is writing ST Limited should pay consideration of 569.97. Let's see, Shreya, wait for everyone to calculate. Yeah, good that you have been so fast. 569.97. Okay, that's what Shreya got. Yes, I can see the chat box where students have calculated 569.97. Supriya also has done. Then as per B limited 660 lakhs, that is what Shreya has calculated. So Madhura has calculated 569.97 from ST Limited's point of view, and Vaibhav has calculated 2590, and 660. 660 is all right, but what about 2590, Vaibhav? That seems to be incorrect. Let's see the answer. Let's see the approach. Okay, no issues. We will compare. So it is 7 times EBITDA before by reduced by outstanding date. Outstanding date means you will deduct this 240. We are calculating for B limited. You are calculating for BE limited, isn't it? And therefore you will reduce from EBITDA 115.71, right? You have to reduce. This is earning before interest and tax outstanding date to be discharged by own shares at market price. 7 times the EBITDA minus out 7 times 115.71 minus outstanding date. So let's see the workings. That is minus 240. The first part we work out. 7 times EBITDA comes to 7 multiplied by 115.71, 809.97. Less date, and that is 240. So 569.97. So as per ST Limited's offer, net consideration payable is 569 and to be allowed in shares of at market price. So divided by 220. So 259,077. I think Vaibhav got the same answer, 259.77. 259. 2.590 Vaibhav. Pradeep Kale got 559.9. Pradeep, little calculation mistake. Vinaya correct. Vinaya correct. So now all of you have seen number of shares to be issued by ST Limited. As per, suppose we calculate everything as per ST Limited's offer only. As per ST Limited's offer, we will calculate everything. Net consideration payable is 569. Then number of shares to be issued will be divided by 220. So 569 upon 220 is 259,077. Now EPS of ST Limited after acquisition. After acquisition, total EBITDA will be 400.86 plus 115.71, 516.57. Less interest, 58 plus 30. Right, both interest you will have to calculate 58 plus 30. If you wish, you can see whether the interest calculated is correct. 10% of 580 is 58 and 12.5% of 240. 12.5% of 240. That will be 12.5% of 240 is 330 lakh. So 58 plus 30 is 68. So EBITDA 516.57 merged entity is EBITDA minus interest of merged entity 88. So you have EBT minus tax 30%. So PAT is this is total earnings, that is 300 lakhs. Total number of outstanding share खुद के 12 लाख outstanding plus 2.59077 259,077 खुद के 12 लाख शेयर है ना, खुद के 12 लाख मार्केट प्राइस पर शेयर 12 lakh divided by 10 rupee equity. Number of shares outstanding is 12 lakh of rupee 10. So 12 lakhs plus 259,077. See the calculation, cross check these calculations on your calculator and see that you are getting the same answer. So PAT 300 upon 12 lakhs plus 2 lakh 2.59077. So that is 14.59077 and EPS is 300 upon 14.59077. So 20.56. That is the EPS. Please confirm to me that you are getting 20.56 as the EPS of ST Limited after acquisition. Right? That is the third question. Total 5 questions have been asked as per ST Limited's offer and secondly as per plan of B Limited. So that we will calculate these 5 things again. But please confirm to me that first 3 parts what you calculated are correct. First is total consideration payable 569.97. Second is number of shares issued 2,59,000. And third one is EPS after acquisition. I'm waiting for your confirmation. The fourth part also you can confirm. In fact, do the calculation. Fourth part is expected market price per share. Expected market price. So EBITDA is 400.86 pre-acquisition, less interest 580 into 100, 10%, that is 58, less 30% tax. So PAT is 240 upon number of shares 12. So EPS is 220 and price earning multiple will be 11. See, price earning multiple is not given in the question. That's why we worked out market price is given. Market price is given as 220. So 220 upon EPS is price earning multiple. So price earning multiple multiplied by EPS 20.56, you will get expected market price of ST Limited. So EPS एक बार आ गया 20.56, उसको multiply करना है P multiple से. But P multiple is not given in the question. P multiple is not given, so we work out P multiple based on the current pre-acquisition strategy. So EBITDA minus interest minus tax, PAT upon number of shares is EPS, and market price upon EPS is P multiple, that is 11. So this is again a catch, an important thing. In the exam, it should click you that you have to calculate this 11. So these are 4 things you have calculated according to ST Limited's offer. 11 rupees is P multiple, multiply by that 20.56 EPS. So expected market price is 226.16. So चार चीज पूछे थे as per ST Limited's offer. Number 1, net consideration payable. Number 2, number of shares to be issued. Number 3, EPS of ST Limited after acquisition. And number 4, expected market price. Expected market price के लिए P multiple was not given. आपको एक पता चला होगा, in these type of problems the methodology is stereotype. The methodology or the approach is stereotype. Every time you are finding out either P multiple or EPS or market price per share by multiplying something or the other, every time you are finding out some missing number. So please confirm to me in the chat box that you have understood all 4 parts of this question. EPS is 20.56. Vinay is writing. Yeah, okay. Shreya is writing EPS is 20.56. Okay. You have understood. Okay. All 4 parts, please confirm to me before I go to the second scenario, and that is as per B Limited's plan. This is as per ST Limited's offer. Now let us work out as per B Limited's plan. Let us work out. See, these are all tedious calculations, and that's what I said. Part B is entirely numerical, and usme bhi 30% weightage is on mergers acquisition. Please confirm that all 4 parts are clear to you. All 4 parts in scenario A. Scenario A is offer given by ST Limited, which is 7 times their EBITDA minus date. That is what is the offer for purchase consideration. Now we are moving to B Limited's plan, but before that, please confirm about ST Limited. Have you understood ST Limited's plan? Please confirm in the chat box. Yes, have you understood? Please confirm in the chat box. Waiting for your confirmation. All 4 parts are through with you. You have understood through with all 4 parts. All right. Go to B Limited's plan. B Limited bolta hai for every 2 shares, 1 share should be offered. So net consideration payable as per B Limited's plan, 3 lakh shares into 220. You can make out the price is 220. Go back to the problem once again. The price is 220. Market price per share is 220. So ST Limited will pay what consideration? That will be as per 1 share in ST Limited for every 2 shares in B Limited. So 2 shares in B Limited, there are 6 lakh shares of B Limited. For 2 shares, 1 share will be issued by ST. So for 6 lakh shares, 3 lakh shares will be issued. 3 lakh multiplied by market price 220 of ST Limited. So 3 lakh into 220, that is 660 is the net consideration payable. Net consideration payable is 660. Some of you have answered it correctly. And number of shares to be issued, 6 lakhs, of course, by 2 into 1, 3 lakh share issue karne padenge by ST Limited. What is the EPS after acquisition? PAT, as per earlier calculation, comes to 300. Total number of shares outstanding, 12 lakh, khud ke share plus 3 lakh, additional shares issued by ST, so 15 lakh. So earning per share is 20 rupees. That is, see, so simple. Actually, these calculations are, this is also a bonus question of 10 marks. Yeah. Fourth is expected market price 20, earning per share is 20 multiplied by 11 P multiple, that is 220. And what is the advantage for acquisition of ST Limited? Advantage of acquisition to ST Limited. Since both companies are in the same industry, following advantages could accrue: synergy benefit, cost reduction, operating efficiency. See, these are standard points. Better market price and avoidance of competition. Since both companies are in the same industry, they are in the same market, obviously the advantage of merger or advantage of acquisition to ST Limited: number one, synergy benefit, operating synergy, financial synergy, cost reduction, operating efficiency will improve, right? And better market share, obviously, because you now have 1 plus 1 equal to 2 plus 2 equal to 5, 1 plus 1 equal to 3, synergy benefit, and therefore better market share and avoidance of competition. These are some of the advantages. In general, also you can write some 3-4 points, but please confirm to me in the chat box, in the question box, whether you have understood first 4 parts of second scenario, that is as per B Limited's plan. Waiting for your confirmation. Very simple. If first part scenario was little complex, second scenario is very simple because P multiple already you calculated at 11. See, it is like Sudoku. These types of questions are like crossword or Sudoku. You go on solving one after the other. One figure leads you to the second figure leads you to the third one leads you to the fourth, and so on. So every next figure you can calculate based on what you calculated in earlier. Yeah, so that way it is a Sudoku. Ek bar 11 rupees, 11 P multiple aa gaya, then second part is not a challenge. Please confirm in the question or chat box. I will not know that you have understood. I can go to the next question only when you confirm to me in the chat. Waiting for your confirmation. Confirm in the questions that you have understood this. Second scenario also, when payment is made by ST Limited as per B Limited's policy, as per B Limited's plan. Yeah, please confirm. So we have completed second question on mergers and acquisition. You have seen how simple it was. You know, out of 5 questions, maybe one of the questions may be tricky, but 4 questions are really straightforward. And those 4 questions only will give a clue or will lead to the 5th question. It's like that. Yeah. Okay. Waiting for your confirmation in the chat box. Have you all understood the second scenario as per B Limited's plan? Same 5 questions you have to answer. What is the consideration paid? What is the number of shares issued by ST? What is the EPS? What is market price per share? And so on. So please confirm. Shreya has confirmed. Vinaya got EPS of 20,000. EPS of 20,000, Vinaya. ₹20. Earning per share is 20. 20,000 nahi hai na, 20 hai na. Vinaya, it is 20, no? Okay. 20. Yeah, correct. Have you all understood? Only Shreya and Vinaya have confirmed. All 3 parts, all 5 parts, sorry. Have you all understood properly? Please confirm. So Madhura, Shreya, Palak Jain has confirmed. Yes. Yeah, it's not only 20, Palak, but it is like all 5 parts of second scenario. Have you understood? Then I can say this problem is closed. So we have done second question on mergers and acquisition. Now look at the third and the last question on mergers and acquisition. Again, it's a lengthy question of 12 marks. There is one more question which is in part B. So that is for 8 marks. 20 marks on mergers acquisition in one entire question. Another question of 10 marks. आपने देखा 30 मार्क का वेटेज दिया था ये टॉपिक को. In second section, that is business valuation. Yeah. Okay. Read this question now. I'm talking about 7A. Blooming Company Limited wants to take over Blooming Company Limited, and their summarized balance sheets or financial statements are given below. I will keep on scrolling up and down. Please read the question once in your mind. Peace of mind is required once you need to read this question in mind. You are given balance sheet, you are given income statement. Look at the question. And additional information is given to you. Proportion of floating shares in stock market. 75% shares are floating, and floating means outstanding, and proportion of 80% of the gloomy shares are outstanding. Market price is given as 45 and 40. Using the above information, what would be the exchange ratio, share exchange ratio to be offered to the shareholders of gloomy company by blooming company based on BVPS, based on EPS, and based on MPS? Three different criteria of determining the exchange ratio. Three different criteria of determining the exchange ratio. It is BVPS or EPS or market price per share. Accordingly, the formula, accordingly, the exchange ratio will change. So question is, what would be the exchange ratio based on the following criteria: BVPS, EPS, and market price. This carries 8 marks. Exchange ratio calculate karne ka. And assuming that there are no synergy gain, determine the EPS after merger if exchange ratio is 1, which is most preferred out of 3, as in one above by gloomy company limited. Assume there is no synergy gain, then determine the EPS after merger if exchange ratio is the one which is most preferred by gloomy company. कौन सा exchange ratio is most beneficial or preferred from the point of view of gloomy company? If that is the correct exchange ratio, then calculate EPS after merger. That is the question. I go up once again so that you can jot down the key figures or take a pic. Take a pic of this. Yeah, take a pic of this. Take a peek of this, because these figures should be there at the back of mind when you are solving. You don't have to dance on the scroll on the screen up and down. That's not required. All right. Yeah, go down. See, all these figures are very important. And then take P&L. Blooming company is acquiring gloomy. Name is indicative. Blooming is obviously rising company, rising star. And gloomy is something which is going to get a vanished gloomy picture. We call it. All right. And additional information given: proportion of floating shares in stock market 75% and 80%, and market price per share 40 rupees and 45 rupees and 40 rupees. Now, if base is BVPS, EPS, and MPS, what will be the exchange ratio? Basically, you have to calculate BVPS, EPS, and MPS of both the companies and determine the exchange ratio based on that. Calculate. I'm waiting for you to calculate book value per share. You want me to scroll the figures up and down, but that's why I asked you to take a peek. Yes, we can have a look at the approach. Second part we will calculate later on. That is, assuming no synergy gain, determine EPS after merger. If exchange ratio is the most preferred one, whichever exchange ratio is the most preferred one by gloomy company, from the target company's point of view, which is the most, the shareholders of gloomy company will be offered shares of blooming company. So from target company's point of view, which is the most beneficial preferred exchange ratio, that we will have to determine, and based on that we have to determine EPS after merger. That is in the second part. So first part is BVPS, EPS and MPS. You have to calculate of both the companies based on the given data. Let's look at the approach. Again, very straightforward question. Calculation of net worth. You can see blooming company and gloomy company. Net worth is equity share capital plus other equity, that is free reserves. That is net worth divided by number of shares. That is 31.5 and 21.875. So you get book value per share, BVPS. You know, basically you should know the formula. BVPS is net worth divided by number of shares. Your fundamental knowledge of financial management should be clear. Only then, if your fundamental knowledge is sound of financial management, then only you can attempt these types of questions. Otherwise, it is difficult. Any doubt on the first part? BVPS. So exchange ratio, how will you determine? Exchange ratio, how will you determine of BVPS? Based on BVPS, 29 is to 22.29. What is the meaning of this? Exchange ratio of 22.29 is to 29. This is a ulta karke likhte hai. Book value per share of acquiring company is more and target company is less. So while writing the exchange ratio, we say 22.29 is to 29 or 0.7685 is to 1. That is, for one share in gloomy company, shareholder will get 0.7685 shares of blooming company. For one share in gloomy, shareholders will get 0.7685 shares in blooming. Yeah, that is the interpretation. Come share billing, because BVPS is more of acquiring firm. So acquiring firm ke come shares milenge to shareholders of target company. So this is what is based on BVPS. Based on EPS. EPS ka formula see, you have seen so conceptual question. This question is so conceptual. Whether student understands the concept of BVPS. Yeah, is the screen visible to all of you? Screen is visible to all of you? Okay. So exchange ratio as per BVPS is 22.29 is to 29. That is the exchange ratio as per BVPS. All right. Exchange ratio as per EPS. EPS is calculated like this: 370.49 is the profit after tax and 240.61 divided by number of shares 31.25 and 21.875, all data given. So EPS 11.86 and 11. Such a simple question. So exchange ratio will be once again 11 is to 11.86 or 11 upon 11.86, so 0.9277. For one share held in gloomy, shareholders will get 0.9277 shares of blooming. Whenever exchange ratio is asked, you have to be narrative. You have to write the narration. Yeah, you have to write the narration when expression like this is asked. Yeah, always you have to write the narration. that for one share in Gloomy, 0.9277 shares of Blooming will be allotted. Okay, and market price per share is 45 and 40. That is already given. So exchange ratio will be 40:45. That is one share held in Gloomy Company Limited. For one share, shareholders will get 0.8889 shares of Blooming Company. So all of you are clear on this exchange ratio? Yeah, exchange ratio is clear to all of you. Please confirm. So now second part, from the point of view of target company, which is more beneficial, since shareholders of Gloomy Company Limited are getting maximum number of shares for one share 0.9277. आप तीनों का कंपेयर करेंगे तो 0.8889 थर्ड ऑप्शन में आ रहा है, then second option में 0.9277 and first option में 0.7685. So whichever is higher, target company will try to maximize its return. So maximize the return means 0.9277 is the maximum number of shares that it will look for. So EPS is the best criteria according to target company. So since shareholders of Gloomy Company, that is target company, are getting maximum number of shares for one share 0.9277, when exchange ratio is fixed as per EPS, shareholders of Gloomy Company will prefer fixing of exchange ratio as per EPS. Fixing of exchange ratio as per EPS. So total PAT after merger, you add 370.49 plus 240.61 total PAT divided by number of shares of Blooming Company after merger, assuming that exchange ratio is determined on EPS. So खुद के 31.25 shares plus 21.875 shares of Gloomy, you are offering 0.9277. So total number of shares is 51.54. Divide 611 by 51. You get EPS after merger is 11.86. I want you to calculate each of these figures in the second part. Just now what I explained to you, before you get confirmed, before you give me confirmation, and before you are convinced that yes, these calculations are correct. According to me, this was a fairly simple question. You have to just work out the exchange ratio based on BBPS, based on EPS, and based on market price per share. 3 criteria. And then which ratio is preferred from target company's point of view? Whichever ratio gives you maximum number of shares, that is preferred, obviously. And therefore, EPS criteria is the best criteria in this example according to target company's shareholders. Right, and based on that criteria, then what is the EPS of the merged entity? So total PAT after merger divided by total number of shares. So existing shares of Blooming, that is 31.25 plus shares offered 0.9277 into 21.875. See whether the calculations are correct. I wait for your confirmation. Don't accept things unless you have seen the calculation yourself. Question is asked by Pradeep Kale. How is other equity of Bloomy 93? In the question it is given as 593. Yeah, let me see, Pradeep. Other equity you mean to say? 1 minute. Let me see the question. Yeah, other equity is 593.75. That is of Blooming. 1 minute. No, it should be taken as 593 only, Vaibhav. Printing error. It is not 93, it should be 593. This figure you are talking about. No, see, if you add 312 plus 593, it comes to 906. मैं भी चौक गया ऐसे कैसे लिया इन लोगों ने, but no, it is correct. They have done correctly, only typo error. Other equity, while writing down in the answer, suggested answer, they have written 93. It should be 593, but total is taken correctly. Don't worry, Vaibhav. So BBPS answer is 29 and that is correct. Pradeep, sorry, not Vaibhav, Pradeep. It's in the answer, it's misprint, sir. Yes, Vaibhav. Answer is 593 on the after you add. Okay. Please explain 7A again. 7A2 again, Shreya. Okay. For you again, I will explain. 7A2. 7A2 क्या बोलता है? From the point of view of target company shareholder, from the point of view of target company shareholder, which exchange ratio is preferred, is preferable. Exchange ratio is preferable, which gives maximum number of shares to the shareholders of target company. That exchange ratio which gives maximum number of shares to the target company shareholders, that is the best exchange ratio. अभी आप देखो ना, 3 आंसर आए थे आपके exchange ratio के, ये 3 आंसर निकालना, that's why it is very important. If these 3 answers go wrong in first part, then second part obviously will go wrong. See, as per BBPS, the exchange ratio was 0.7685. 0.7685 as per BBPS criteria. Then as per EPS criteria, 0.9277. All right. And as per MPS criteria, it is 0.8889. Now ये 3 रेशो में, 3 proportion में कौन सा proportion highest है? Obviously 0.9277, and therefore EPS is the criteria in this question, not every time. In this question, EPS is the preferred criteria for target company shareholders. So 0.9277, on that basis, the shares will be issued in the shares of new company will be issued. Blooming company will issue its share. So 0.9277 multiplied by 21.875. 21.875 shares of Blooming company. So उसको मिलेगा into 0.9277 plus Blooming के खुद के 31.25. So that will give you total number of shares after acquisition, and total profit after merger will be 611. दोनों का profit इकट्ठा करो. So EPS after merger will be 11.86. Have you understood, Shreya, now? Shreya, have you understood now? Okay, thank you. Yeah. So good, we are practicing these types of questions, different types of questions, but within the topic mergers and acquisition. So business valuation and M&A. Very, very simple question. I don't think there was anything tricky in this for final students, because final students are matured. They understand properly the given data. They interpret the data correctly. They read between the lines. They know how to read between the lines, how to interpret the data. So I don't think these types of problems will be tricky. According to me, this entire, so far, whatever questions we have solved on mergers and acquisition, this was the 4th question we did on mergers and acquisition. And the last one, 5th question. Total 5 questions were asked in this attempt. December 19 on mergers acquisition. So अभी last question हम लोग कर रहे हैं, वो थोड़ा सा tricky है because it is based on the formula. So we are looking at question number 7B. Yeah, because here you have to make use of the formula for calculating the exchange ratio. So we have seen 6B, we have seen 7A, 7B, and we have seen also 8A or B, one of them. 8B we have seen. 4 questions we have seen. Yeah. AB and VZ Limited. Now we are doing this question. AB and VZ Limited. Look at what is highlighted. AB and VZ Limited are contemplating a merger deal in which AB will acquire VZ Limited. The relevant information about the companies are given as follows. Total earnings given, number of shares, EPS, P ratio and market price. बस यही डेटा बार बार देते हैं, and वो भी कैलकुलेट करके दिया है. देखो 70 divided by 20, 3.5 is EPS, multiplied by P multiple 12, so your market price per share is 42. Similarly, VZ का 28 divided by 10, so 2.80 multiplied by P multiple 10, again market price 28. So everything is given to you readily. Yeah. What is the maximum exchange ratio acceptable to the shareholders of AB Limited? अभी इसके लिए फॉर्मूला है, मिनिमम एक्सचेंज रेशियो और मैक्सिमम एक्सचेंज रेशियो का फॉर्मूला आपको रिमेंबर करना पड़ेगा, बाय हार्ट करना पड़ेगा. So what is the maximum exchange ratio acceptable to the shareholders of AB Limited if P ratio of the combined firm is 12 and there is no synergy gain? There is no synergy. In the above question also there was no synergy gain. Otherwise we would not have added the profit after tax as it is. उसमें synergy gain भी add करते. When two companies merge, A and B Limited merge, profit of A gets merged with profit of B, plus there is synergy gain. So profit of the combined entity is profit of A plus profit of B plus synergy gain. But in this case there is no synergy gain, and therefore we calculated combined EPS as combined profit of two companies upon number of equity shares, total number of equity shares. So in this question also, assuming no synergy gain, and if P ratio of the combined firm is 12, what is the maximum exchange ratio acceptable to the shareholders of AB Limited? See, AB Limited will try to give as less number of shares as possible. Please understand, एक psychology याद रखो हमेशा, that is what is the thumb rule, that any acquiring firm will try to give minimum number of shares to the target company shareholders, whereas target company will try to achieve, try to get, secure maximum number of shares in the swap, in the exchange, right, when it is selling the business. I repeat, the target company will try to look for maximum number of shares to be given by the acquiring company for acquisition of the business. So they will always look for what is the exchange ratio maximum, that is target company, whereas acquiring company will always look at minimum exchange ratio. Jitna kam se kam denge utna acha. From acquiring company's point of view, this is called thumb rule. Look at my thumb, remember this thumb rule, right? So here the question is, what is the maximum exchange ratio acceptable to the shareholders of AB Limited? AB Limited ko to minimum exchange dena hai, minimum shares dene, but worst come to worst scenario, if they have to fall victim to pressure made by VZ, then what is the maximum exchange ratio which is permissible to them? If P ratio is 12 and no synergy gain, this is question number 1. And question number 2, what is the minimum exchange ratio acceptable to the shareholders of VZ if P ratio of the combined firm is 11 and there is a synergy benefit of 5%? So here abhi synergy benefit hai. So minimum exchange ratio acceptable to the shareholders of VZ. That means shareholders of VZ, when they sit for negotiation, will not accept anything less than this exchange ratio. Itna to exchange ratio chahiye unko, minimum. Zyada se zyada chahiye, but ye to minimum hai. So always the target company shareholders are interested in getting maximum number of shares, and therefore they will determine or they will negotiate the minimum exchange ratio. I repeat, the target company shareholders will always look for maximum number of shares from the acquiring company in exchange of business, and therefore they will always be looking for minimum exchange ratio to be set during negotiation. Ulta, exactly opposite. The acquiring company will always try to give minimum number of shares to the target company, and therefore they are looking at what is the upper ceiling, maximum exchange ratio beyond which they would not like to go. So have you understood this basic concept? You have to basically find out maximum exchange ratio and minimum exchange ratio in this problem. You will find generally one question. If there are 4 questions in December 19, 4 questions were asked on mergers and acquisition. So 4 में से at least एक आधा question तो रहेगा on maximum exchange ratio from target company's point of view and minimum exchange ratio from maximum exchange ratio, that is from acquiring company's point of view, and minimum exchange ratio from target company's point of view. That one question has to be there because it is formula based, and therefore you have to remember the formula. Please tell me so far whatever general understanding I tried to give you, have you understood? Please confirm in the chat box. Have you understood the general guideline what I have explained? Vinaya has confirmed. What about others? Please confirm. I will not be able to proceed unless you confirm. Yeah, Pradeep also has confirmed. Shreya has confirmed. Sumadhura and Vaibhav all have confirmed. Good. Thank you so much for your active response. Yeah. Let's look at the formula. ये formula आपको याद रखना पड़ेगा. I'll scroll down. You're looking at 7B. 7B formula is like this. Maximum exchange ratio acceptable to the shareholders of acquiring company is equal to, ये formula है, market price per share is equal to market price of A, right? Here it is AB and VZ. So market price of A is equal to EPS of A plus V into price earning multiple of A plus V. That means this is basic rule. Market price per share is equal to EPS of the merged entity into price earning multiple of the merged entity. Price earning multiple of the merged entity is given as 12. That is given. And EPS of the merged entity, we can find out 70 plus 28 is the total earning of both the companies divided by number of shares. Number of shares of existing company is 20, that is the acquiring company AB is 20, and 10 lakh shares ke against you are giving the exchange ratio. So 10 multiplied by exchange ratio, you will get MPS, which is equal to 42. See whether you have understood this equation from the given data. We have just worked out 42 is equal to market price of AB Limited is equal to market price is equal to price earning multiple, which is 12 in this case. First scenario, it is 12. So 42 is equal to 12 multiplied by EPS. EPS is total earnings. Total earnings is 70 plus 28 upon number of outstanding shares, that is 20 plus 10 into exchange ratio. 20 plus 10 into exchange ratio. See whether you have understood this equation. Repeat the formula, cannot be seen on the screen. That formula I will repeat. Okay, the formula is, see, this is the formula. Formula means this is the expression you have to write. This is not a formula, this is the expression. Market price per share is equal to, this is the formula I have highlighted. If it is not available on the screen, then you will have to, is it available on the screen? Vinaya, is it available? Otherwise I'll dictate. Should I dictate, Vinaya, or is it available on the screen? Cannot be seen on the screen, then I will repeat. Yes, I will dictate, don't worry. Write down market price per share of AB Limited. Market price per share of AB Limited is equal to, market price per share of AB Limited is equal to EPS of merged entity, EPS of merged entity multiplied by P ratio of the combined firm. EPS of the merged entity, EPS of the merged entity multiplied by P ratio of the combined entity. EPS of the merged entity multiplied by P ratio of the combined entity. Simple formula hai. Market price per share of acquiring firm, market price per share of acquiring firm is equal to EPS of the merged entity multiplied by P multiple of the merged entity, multiplied by P multiple of the merged entity. All right, Vinaya. So market price of the merged entity is, market price of A rather, AB Limited is 42. 42 is equal to 70 plus 28. Is this equation clear to you? 42 is equal to 70 plus 28. Write down 42 is equal to 70 plus 28 divided by 20 plus 10 into exchange ratio. 20 plus into bracket 10 into exchange ratio multiplied by 12. I repeat, 42 is equal to 70 plus 28. 70, next step I have gone to 70 plus 28. 70 is the earning of AB and 28 is the earning of VG. So 70 plus 28 divided by 20 lakh number of shares of AB plus 10 lakh shares of VG multiplied by ER. And entire thing, this is EPS of the merged entity multiplied by P multiple 12 is equal to 42. Solve the equation and find out the exchange ratio. This is the equation where exchange ratio is missing. Solve the equation and get the exchange ratio. Yeah. Vinaya, have you understood? Dictation was all right, Vinaya. All other figures are visible, Vinaya. All right, formula is not visible, I understood, but all figures are visible. Okay, thank you. So solve this equation and get the ER, exchange ratio. See, exchange ratio comes to, this is the equation, sorry. Instead of using the formula, I would recommend that there is another way of calculating using the formula, but formula is very difficult to remember. Formula is difficult to remember. You may have to by heart the formula, and therefore better to solve this equation. So solve the equation and get the exchange ratio. Exchange ratio comes to 0.80. Maximum exchange ratio is 0.80. That means number of shares that will have to be offered is for 10 lakh shares 0.80, 10 lakh 10 million, sorry, into 0.80. So 8 billion shares will be issued. Please confirm that you have understood the first part, that is maximum exchange ratio. Please confirm. Maximum ratio comes to 0.80. Please confirm. Supriya, Shreya, Vinaya, yeah, you have confirmed. That's what I said. Now, without formula, this question also becomes very simple. So that means, can we conclude or summarize that all 4-5 questions which were asked on mergers or acquisitions, mergers and acquisition in this December 19 exam were all very simple. They were manageable. मुझे एक भी question टेढ़ा नहीं लगा, जिसमें कुछ catch था, जिसमें कुछ trick था, कुछ difficult part था. मेरे ख्याल में तो कुछ भी नहीं था. It was all straightforward question. One after the other, one figure leads you to the second. एक बार आपको EPS आ गया, you can get MPS. EPS into price earning multiple, you get MPS. So one figure leads you to the second. Second one leads you to the third. Third one leads you to the fourth. So it's a chronological sequence. The chain is established automatically. So that way I found this paper was very easy. One can get even 50 on 50 if multiple choice MCQ questions are correct. All right. So similarly, now minimum exchange ratio acceptable to the shareholders of VZ Limited we will calculate. Minimum exchange ratio acceptable to the shareholders of VZ. Once again, the formula remains same. Now it is market price per share of Vinaya, please write market price per share of VZ Limited is equal to market price per share of VZ Limited is equal to market price per share of VZ Limited is equal to earning per share of combined entity, earning per share of combined entity multiplied by price earning multiple, earning per share of the combined entity into price earning multiple into exchange ratio. Here you have to remember into exchange ratio. I repeat, market price per share of the target company, that is VZ Limited, is equal to EPS of the combined firm, EPS of the combined firm into P multiple into exchange ratio. That exchange ratio को star मारो, because that is something which is extra in this formula. Last formula, maximum exchange ratio, we started market price per share of acquiring company, because acquiring company is interested in what is the maximum exchange ratio which can be given. उसके beyond तो नहीं देंगे वो. Similarly, VZ Limited target company is interested in minimum exchange ratio. So when you take minimum exchange ratio from target company's point of view, you take MPS of the target company is equal to EPS of combined firm into price earning into exchange ratio. ऐसा formula लिखना है. And when you take maximum exchange ratio to the shareholders of from the point of view of AB Limited, then it is MPS of AB Limited combined entity, MPS of the acquiring company is equal to EPS of the combined firm into price earning multiple of the combined firm. उधर exchange ratio से multiply नहीं करना है first part में. Second part में ये exchange ratio वाला भी part है. Please confirm that you have understood and distinguished part 1 from part 2. Vinay is writing exchange ratio based on EPS also comes to 0.8. Exchange ratio based on EPS also comes to 0.8. No, based on EPS कहाँ है? You have to calculate. मैंने based on EPS ऐसे कुछ बोला ही नहीं. मैंने बोला exchange minimum exchange ratio acceptable to the shareholders of VZ Limited, that is target company. Formula है market price per share of target company, that is equal to EPS of the combined firm into price earning multiple into exchange ratio. Have you written the formula correctly, Vinaya? Vinaya, have you written the formula correctly? Please confirm. Have you written the formula? So 28 rupees. Yes, that is for first. So second के लिए Vinaya, have you written the formula? First. Yeah, first के लिए answer comes to 0.8. Correct. I got it. But now second के लिए we are working out. So let's move to the second part. Let's move to the second part. So second part, market price per share of target company 28 is equal to earning per share of the combined entity. Earning per share of combined entity is 70 plus 28 divided by number of outstanding shares, that is 20 into 10, 20 plus 10 into exchange ratio, right? 20 plus 10 into exchange ratio. And by the way, 5% synergy gain. So 70 plus 28 into 1.05. There is a synergy gain applicable. So 5% increase in the operating profit in the second scenario. Don't forget that. So 70 plus 28 into 1.05. See, it is in front of you. So far you had all the questions where there was no synergy gain, but now 5% synergy gain. So 70 plus 28 into 1.05. Don't forget this, otherwise your answer will go wrong. Divided by 20 lakh shares of AB plus our exchange ratio multiplied by 10 lakh shares into price earning multiple 11 into ER exchange ratio. Solve this equation and see whether you are getting exchange ratio as 0.65735. 65735. I'm waiting for your confirmation to confirm to me that this is the figure which I have highlighted. 0.65735. You have to basically solve the equation to find out minimum exchange ratio. Please confirm in the questions or chat box. Waiting for your confirmation for getting the correct answer. Waiting for your confirmation. We must get 0.65735. Take your time, take 5 minutes. Yes, confirmation is given by Shreya, also by Sumadura. What about others? 0.6573. That is what you got. Sumadura, you got 0.6573. Shreya also got 0.6573. Okay, 4 decimals, 5 decimals, that is all right. So that means how many shares will be offered? 0.6574 multiplied by round of karo, 0.6574 into 10 million. So 6.5735 million. Yeah, so total number of shares minimum which VZ will expect, VZ shareholders will expect, itna to milna hi chahiye, 6.5735 million shares that they will expect. And AB Limited will give maximum of 8 billion shares. That is the interpretation. So AB Limited will give maximum of 8 billion shares, whereas minimum shares expected by VZ will be 6.5735. It's like this. So somewhere there will be a negotiation that will be carried out between the shareholders, between the managements of two companies, and accordingly the exchange ratio will be determined. 0.65 is the minimum, at least that is what I was telling you yesterday. The valuation range, it's neither one company stand nor the other company stand. From the minimum, from target company's point of view, minimum exchange ratio is relevant, and therefore they say that 6.5735 mil nahi chahiye number. From the acquiring company's point of view, nothing beyond 8 million. So that's the maximum. So finally, after this conflict, after this tu meme, what we say, ultimately one amicable situation will be worked out by managements of both the companies, and the exchange ratio will be determined. So no management is rigid, and no one will expect other company to accept whatever it is saying. So there will be negotiations that will be carried out, that is in real life, to determine the exchange ratio. Please confirm, every one of you, that you have understood this 6.5735 as exchange ratio. Sumadura and Shreya have confirmed. What about others? Exchange ratio 0.6573. Please confirm. I can't proceed unless you confirm. 0.6573. Have you received it? Have you worked out this? There are formulae also, but I will not recommend you to by heart or remember the formulae because they are very laborious, time consuming, and if any figure goes wrong, Supriya also has confirmed 0.6573. What about others? Others have not got. Vaibhav. Vaibhav, are you stuck anywhere? You are not confirmed, Vaibhav. Pradeep Kale, you are not confirmed. Vaibhav has confirmed 0.65. You have to solve the equation. That's all. Put the figures in the formula and solve the equation. That's it. Pradeep, are you comfortable in this topic? Minimum exchange ratio and maximum exchange ratio. They have given the formula also. Look at the formula. Formula are so clumsy that ER, exchange ratio, is equal to, S of A, that is number of shares of acquiring company upon number of shares of target company, plus P multiple of combined firm into EPS of combined firm upon MPS of standalone companies into number of shares. Very clumsy formula, very difficult formula. This is the formula. This formula may not be even visible to you on the screen. Don't bother about the formula. The main formula what I give to you about market price per share, because that is something which is easy to understand. Market price per share is EPS into price earning multiple. Yeah? So we have completed all 5 problems on mergers acquisition, 1 on EVA and 1 on valuation of equity share. Please confirm that you are now comfortable with mergers and acquisition, which carries 30% weightage in our question paper. 30% weightage means 30 marks question you can attempt only on valuation in context of mergers and acquisition. Please confirm that you have understood the entire December 19 question paper on M&A, EVA, EVA, economic value added, and also the valuation of equity shares. So these 3 topics are thoroughly done. Now we look at some of the objective questions from the same attempt December 19. But before that, I expect confirmation from all of you. Shall I go to the multiple choice questions from the same attempt? Yeah. Yes, others also confirm. Yeah, fine. Now they are assorted questions, so it will be a good practice. And December 19 is a representative paper because that was immediately last paper, yeah, on business valuation. Last paper on business valuation. June 20 की exam तो हुई नहीं थी. And last 5 years question papers, that is 10 attempt question papers, you must solve. For practice purpose, you must solve last 10 attempts question papers. Yeah. Now I give time to you. You have to write down the correct answer. These are multiple choice questions on FCFE, FCFF approach, and different topics which we have learned from time to time. Anini Limited earned free cash flow to equity shares during the financial year, that is FCFE is given at 5 lakh. Cost of equity is 12%. Free cash flow to equity is expected to grow forever at 10%. What will be the value of Anini Limited using FCFE valuation approach? So you are given the growth rate, perpetuity for perpetuity forever, that is 10%. Cost of equity is 12%, and FCFE is 5 lakh. So what will be the value of the firm? What will be the value of the firm? A, B, C, and none of the above. The answers are in front of you. I wait for your calculation and let me know in the box. Let me know in the box. Vaibhav is saying no question on goodwill in that paper. No, Vinaya, there was no question on goodwill. We will definitely do one question on goodwill today itself, right now. Let's complete this MCQ and then we will do one question on goodwill. ठीक है Vinaya? Okay, Vaibhav says answer is C, 275. Vaibhav, yes, we will wait for others to calculate. Vaibhav, we will wait for others to calculate. Even Shreya got C. So let's wait, Shreya. Yes, only 3 students have given the answer. What about others? Look at the approach. Answer is 275. Now, how 275? Look at this calculation. Free cash flow to equity is 5 into 10% increase. So 5 into 1.10 upon KE minus G. If it is for perpetuity, obviously you capitalize. Capitalize means divide by KE minus G. So it is dividend discounting model, like that earning capitalization model. So earnings, future earnings, FCFE divided by KE minus G. So 5 into 1.10 divided by 0.12 KE, cost of equity, average cost of capital, minus growth rate 10%. So rupees 275 lakhs. And always remember, in the denominator it is percentage. So 12% minus 10% is 2%. और 2% है denominator में 0.02. Don't forget that. Yeah, so it comes to 275 lakhs. Correct answer. So I'm happy that 3 students got correct answer. No, 4, 5 students. Practically everyone. Good, good, good. Everyone. Let's move to the next. So you got, let's take this merger acquisition question. See how simple questions are. Again merger. 32 मार्क का क्वेश्चन पूछने के बाद भी इन लोगों का satisfaction हुआ नहीं है. They are giving another question on merger acquisition for 2 marks. Already 3-4 questions were asked, out of which 3 you have to attempt. So 30 mark का तो already पूछ लिया, but again one more question of 2 marks. A Limited is considering to acquire B Limited through all share deal. Through all share deal means purchase consideration will be settled in the form of equity shares. Through all share deal का मतलब purchase consideration will be settled in the form of equity shares. So relevant information is given to you. Present earnings 7.5 crores, 2.5 crore. Number of equity shares 4 and 2. Price earning ratio is given to you. Price earning ratio is, once you get price present earning upon number of equity shares, you get EPS. And EPS into price earning ratio is MPS, multiple market price per share. I repeat, earnings upon number of equity shares is EPS, and EPS into PE multiple will be market price per share. आ गया market price per share. So given the above information, exchange ratio based on market price will be. Yes, I wait for your answer. Part 5th part we are solving. ये 4 में से कौन सा ऑप्शन होगा? Please. सुप्रिया ने 5 आंसर दे दिया ऑलरेडी. सुप्रिया, how fast you are. Supriya, how fast you are. Very good. But wait for others to calculate. Vaibhav got 0.60. Oh, Vaibhav got 0.60. Means Supriya, your answer is not in one of the alternatives. 5 answer is correct, but that's 1:5 or it is 5:1. That also is important, no? So 1/5 किया आपने तो 0.20 आ जाएगा, 0.60 नहीं आएगा. So Vaibhav is giving 0.60. I wait for some more answers quickly. Earnings upon number of equity shares will give you EPS. EPS into price earning multiple will give you expected MPS. And then the ratio. Shreya also got option A, 0.60. Sumadhura got A, 0.60. And Supriya, your answer went wrong. Supriya, your answer went wrong. Okay, let's look at the approach. 0.60 is the correct answer. Present earnings 7.50 to 0.50 divided by number of equity shares 4 and 2. So price earning ratio is 10 and 9. Price earning ratio given as 10 and 9. So 7.5 upon 4. EPS is 1.875 and EPS is 1.250. Multiply by PE ratio, you get 18.75 as market price and 11.25 as the market price of B. And A is acquiring B, so therefore B is a target company. So exchange ratio will be based on market price will be 11.25 upon 18.75. See, come share issue करेंगे ना. A Limited is the acquiring company whose market price is higher than target company's market price. So A Limited will issue less than 1 equity share for every 1 share in B Limited. So it is 0.60. So it will be 0.60. All right. So everyone got 0.60. Have you understood, Supriya? How 0.60? Supriya, have you understood? Please confirm. 0.60. Okay, thank you. Look at the next question. So you are getting assorted practice on different. These are also numerical questions. आपने देखा होगा ये भी सब question numerical questions है. Look at the second one. Smith Limited announced issue of warrants on 1:1 basis for its equity shareholders. I told you these are convertible warrants. So warrants are convertible at an exercise price of rupees 15. Warrants are detachable and are trading at rupees 7. That means each warrant can be traded in the market at rupees 7. They are detachable warrant. Warrants can be converted at exercise price of rupees 5. What is the minimum price of the warrant if current price of the stock is 20? See, company is issuing warrants on 1:1 basis to its shareholders. That means existing shareholder के पास एक शेयर है तो उसको एक वारंट मिलेगा जो मार्केट में अभी डिटैचेबल वारंट्स आर ट्रेडिंग एट 7 rupees and exercise price of warrants which are convertible is 5 rupees. That means if you avail this offer and if you exercise your option of converting the warrant into equity share, that will be at 5 rupees when trading is at 7. What is the minimum price of the warrant if current price of the stock is 20? Now this is on valuation of debt instruments, that is convertibles, valuation of convertibles, valuation of warrants. I expect you to get me the answer. Those who have started studying would be comfortable. Shreya once again has given the correct answer, the first answer, but others, let others confirm. Shreya is saying B, 5. Even Vaibhav got the correct answer, 5. Okay. Supriya also got 5. Okay. Okay, Vinay, I do not know. Okay, we will discuss then, don't worry. See this formula, you remember, minimum price of the warrant is equal to current stock price minus exercise price of the warrant into exercise ratio. Yeah, it's like this. Remember, minimum price of the warrant, please take down the formula. Minimum price of the warrant is equal to minimum price of the warrant. Please write down in your notebook. Important. Minimum price of the warrant is equal to into bracket current stock price minus exercise price of the warrant. Current stock price minus exercise price of the warrant in one bracket, bracket close, current stock price minus exercise price of the warrant into exercise ratio, So 20 rupees is current stock price minus exercise price of the warrant is 2 into exercise ratio is 1:1. So into 1. So you get rupee 5 as the minimum price, minimum price of the warrant of Smith Limited. Now this warrant is in detachable form trading at 7 rupees. That has no relevance at all. I told you, no, every information given may not be used, need not be used. Keep this at the back of your mind. This is given just to confuse. You are interested in exercise price of the warrant and the current stock price. That's all. At what price warrants independently when they are detached, at what price are they trading is of no concern to us when we determine current price, sorry, minimum price of the warrant. Yeah. All right, Vinaya, are you now comfortable with this formula? Minimum price of the warrant is equal to, what have you written? Current price of the stock minus exercise price into exercise ratio. All right, Vinaya. Okay, do right. Yeah. Vaibhav, I don't mind, but you can put a request. Yeah, and maybe post Diwali we can think of. Vaibhav is saying, sir, can you arrange for an additional session of your classes? Yeah, subject to your availability. I am available provided you know, WRC agrees on this. So you please check with WRC. All right, Vaibhav. Yeah. but that will be post Diwali only now. That will be somewhere on 17th or 18th. Yeah, so that we can work out, but you first put up a request. Now let's see. I'll do accordingly. Yeah, put up a request to WRC. All right. Thank you. थर्ड क्वेश्चन वी टेक अगेन ऑन मर्जर. सो ऑलरेडी 30 मार्क का वेटेज हुआ था मर्जर पे. एक्चुअली 4 क्वेश्चन पूछे थे आप, 8 मार्क 12 मार्क के. सो देखा जाए तो 40 मार्क मर्जर एक्विजिशन था, वो कम पड़ा. तो इसके लिए अगेन इन मल्टीपल चॉइस 2 क्वेश्चंस हैव बीन आस्क्ड फॉर 2 मार्क्स. लुक एट द वेटेज फॉर दिस टॉपिक मर्जर्स एंड एक्विजिशन एंड वैल्यूएशन. ये पेपर वैल्यूएशन का है या मर्जर्स एक्विजिशन का, ऐसे सब कभी कभी लगता है. इट्स लाइक दिस. सो यू हैव टू बी वेरी थरो एंड यू कैन नॉट अफोर्ड टू लीव दिस टॉपिक फॉर ऑप्शन. Value of alpha and beta are 50 lakhs and 25 lakhs. On merger, their combined value is 94 lakh. If Beta Limited receives premium on merger of rupees 15 lakh, if Beta Limited receives premium on merger rupees 15 lakh, what will be the synergy gain for merger? You know synergy gain is equal to 2 plus 2 equal to 5. So that 1 is synergy gain. So you have to calculate synergy gain. Very fundamental question. Independent valuation of alpha and beta is 50 and 25 lakh. Their combined value is 50 plus 25, 75 होना चाहिए, but combined value is 94 lakh. And ये 94 lakh combined कुछ पाने के लिए कुछ खोना पड़ता है. So there is some additional premium on merger, that is 15 lakh, which Beta Limited receives. What will be the synergy gain from merger? Yes, please calculate. When I is saying on SCM also, now this SCM you have to request again, same copy paste. You have to request WRC for SCM also, strategic cost management. You have to request WRC. Yeah, I am available for your help, but it should be approved by the institute WRC, because it is on the institute platform. Yeah, this is not a private platform, personal platform. It is institute's platform, and therefore it should be approved by institute. Vinay, you please request WRC. We will take it forward. All right, for SCM, because that becomes altogether a different paper. Yeah, okay. Vinaya, Shreya, all have given the answer A, that is 19. Let's see. Okay, others also do it. Let me see. Okay, I'm waiting for others to answer. Okay. Sumadra also got A. Okay, let's compare. Let's see whether it is the same. $94 minus 50 plus 25, 19 lakhs. Premium on merger is irrelevant. Yeah, so again, time and again it has proved, lot of data is given. You are surrounded with data, but as final students, you should be matured enough to filter in the relevant data and ignore the redundant data. So premium on merger is irrelevant information for calculating synergy gain. Right, synergy gain is combined value of A plus B minus arithmetic addition of independent values of A and B. Had these two firms not merged, their independent values would have been arithmetic addition of the two versus combined value will give you synergy gain. Yeah. Next question is on EPS calculation. A company with PAT of rupees 60 crores, tax rate of 30%, plus cess of 3%, return on equity is 20%, other equity 20 to 25 crore, PAT is growing by 8% per annum, and equity share with par value of 10 will have EPS of so and so. So to calculate EPS, again it's a straightforward question. I don't think it has anything to do with valuation. It is a general financial management question. PAT is 60 crore, tax rate 30%, cess of 3%, ROE is 20%, other equity 225 crore, PAT is growing by 8% per annum, and equity share has a par value of 10. So what will be the EPS? EPS is profit available to equity shareholders upon number of equity shares. right? Number of equity shares are not given, and that is the catch in the question, but you can always find out number of equity shares. Return on equity, all of you know, ROE is equal to PAT upon net worth. PAT upon net worth. Equity shareholders funds, return on equity, ROE, please take down the formula, is PAT upon net worth, that is equity share capital plus other equity, reserves and surplus. Reserves and surplus is given, but equity share capital is not given. So you find out what is equity share capital. Without that you cannot find out EPS. Equity share divided by share will give you number of equity shares. So I have given you the clue. ROE 20% is equal to PAT upon equity net worth. So PAT is given, ROE is given, you can find out net worth. Net worth में से इतना other equity है 225, so balance is pure equity. So equity divided by 10 rupee par value will give you number of shares, and then PAT upon number of shares will give you EPS. So थोड़ा टेढ़ा calculation है, and while doing so don't forget 8% increase is there. इतने सारी कैलकुलेशन करते करते भूल मत जाना, 8% increase है PAT में for the year is growing by 8%. So please apply this. I am waiting for 2 minutes for you to get me the correct answer. This has actually nothing to do with valuation, but you be prepared. As a bonus questions also you should grab. Shreya has written the answer B. Shreya, wait. For everyone to calculate. B means yes. Sumadra also got B. Okay. Supriya also got B. Okay. What about others? Look at the approach. PAT is 60, ROE is 20%. So total equity will be PAT 60 upon 20%, that is 300. Total equity may say other equity is 225. So share capital pure per se is 75, and 75 upon par value is 10 rupees. So 7.5 crore is the number of shares, and therefore EPS will be PAT 60 upon 7.5. EPS is 8. EPS is 8. Yes, so everyone got 8 as the correct answer. Good. B or 8, it is one and the same. Therefore, answer is B. All right, so I'm sure you are benefited because of this. Now we will look at valuation of goodwill, just see whether it is possible to find out from the earlier attempt, that is June 19, whether there was any coverage on valuation of goodwill. It may or may not be asked every time, but you have to be prepared. Yeah. Yeah, there is a goodwill question. Yeah, there is a question on goodwill which we will target. Hajela Private Limited is negotiating to sell their business to a public limited company. Following is summarized extract from the balance sheet as on 31st of March of Hajela Private Limited. See, question of goodwill arises when there is a sale of business and private limited company is selling the business. So over a period of time, it has acquired some goodwill. So we are required to calculate the value of goodwill. So that can be added to the figure of net assets for deciding the purchase consideration. Capital 1000 shares of 1000 each, that is 10 lakhs. Reserves 2 lakhs, so total 12 lakhs. Some extracts are given. This is not a complete balance sheet, only balance sheet extracts are given. Fixed assets less depreciated cost, at depreciated cost is 6 lakh 40. Current assets less current liabilities given, and that's how the balance sheet extract is tallied. The profits of for 5 years analysis, profits of Hazel Limited for 5 years, it has been in existence. After eliminating any extraneous or non-recurring debits and credits are 190, 230. These are 5 years profits after adjustment of all non-recurring items. 5 साल का profit दिया है. Return of 20% per annum on the capital employed is considered to be reasonable in this particular kind of business. It is expected that future requirement as to capital will not vary materially from the capital employed on 31st of March. So whatever is the existing capital will continue to be there in future also, and 20% return on capital employed is considered to be reasonable in such kind of business. Ignoring any extraneous factors that may affect the position, suggests the amount that should reasonably be paid to a private company for goodwill, therefore to be acquired by the purchasing company, giving details of how you work out this amount by assuming 3 years of purchase for valuing the goodwill, but capital employed be considered for this purpose. 10 mark question, कुछ भी दम नहीं है question में. Valuation of goodwill, कुछ भी दम नहीं है, because there are no adjustments in respect of non-recurring income, non-recurring expenses, extraneous items of income, expenses, कुछ भी adjustment नहीं है. 5 साल का profit, उसका average निकालो और 3 years purchase for valuing the goodwill. That is the question. And general rate, normal rate of return in the industry जो चल रहा है is 20%. All of you know that formula for valuation of goodwill, super profit multiplied by number of years purchase. And how you get super profit? It is future maintainable profit, FMP, minus NRR, normal rate of return, into capital employed. Please write down the formula. Super profit is equal to FMP, future maintainable profit, you can use short forms, no problem, final students. Future maintainable profit, FMP, minus into bracket NRR into capital employed, in bracket close, minus into bracket NRR, normal rate of return, which industry is expected to earn. NRR means normal rate of return, that is industry average, multiplied by capital employed. So you have the formula FMP minus into bracket NRR into capital employed, that gives you super profit, and goodwill is equal to super profit multiplied by number of years of purchase. I think in TY BCom you would have studied valuation of goodwill. So super profit multiplied by number of years of purchase, that is what is goodwill. Why I call this question so simple, 10 मार्क के लिए क्यों रखा है मालूम नहीं है, because it is so straightforward. इसपे कुछ non-recurring items के adjustments ही नहीं है. It is expected that these items of non-recurring expenses income will not be featuring no major changes, no material changes. Means status quo remains the same. Such a simple question. Have you written the formula? Super profit is equal to, I repeat, FMP, future maintainable profit, minus into bracket NRR into capital employed. Generally average capital employed, but here 1 year data is given and therefore closing capital employed. Yeah, this should be fit in your mind. Whenever 2 years balance sheet is given, average capital employed. 1 year balance sheet given on the closing capital employed. So NRR into closing capital employed, deduct from FMP, future maintainable profit, and future maintainable profit is average future maintainable profit post tax. Remember this. इसमें tax भी नहीं है. So simple. Average future maintainable profit post tax, because profits which are given to you is after eliminating all the expenses. कुछ tax rate दिया नहीं है, कुछ भी दिया नहीं है. So everything is straightforward. Yeah. And once you get super profit multiplied by number of years of purchase, number of years of purchase will give you value of goodwill. Will you quickly calculate value of goodwill and let me know? I'm waiting for your feedback. Any questions you can ask to me in the chat box. Have you understood the problem which I have read out? I read out very fast because actually a final का stuff है नहीं. This is meant for TY BCom students, right? But still we have to give the coverage. You know, questions are asked in the exam, so we have to give weightage and coverage in the crash course also. So I am doing it. But actually it is supposed to be covered in TY itself. Yes, Vinay, you got it so fast. Obviously because it is TY question, but let's wait for everyone to get the answer. I expect everyone to give me the answer. 10 marks is the weightage. Yes. Yes, Vinay, I remember you very well. You are not a student actually. You're, yeah, I remember you attended my, which is that program? Industry oriented program, correct? Now I recollect. Thank you, IOP. Thanks for reminding me. Yeah, last 3 days I was wondering that who is this Vinay? Surname I did not remember. So, but now I recollect. Yes, thank you for reminding. Yeah. You are picking up very fast. I must say that you have understood and captured very well. Yeah, Vaibhav, Shreya, both are correct. Both got the correct answer. Shreya and Vaibhav, correct answer. Vaibhav, initially you got something correction. Okay, Vinay, Vaibhav. Vinay. Okay. All right. So mother also correct. Okay, we look at the answer now. 90,000. सबका आंसर सही पूरा सही नहीं है. Yeah, you can make out range, valuation range. So approach देखो, total profit 1,90,000 plus 2,30,000 plus 2,15,000, 5 साल का डेटा दिया है, divided by 5, so you get average profit 2,70,000. Reasonable rate of return on capital employed, 12 lakhs is capital employed into 20%, so 2,40,000, and therefore super profit is 270 minus 240, so therefore 30,000 is the super profit multiplied by 3, so value of goodwill is 90,000. Now you are final student, so if you adopt only one approach based on the profitability, that is not fair. Yeah, you should also look at capitalized value. Capitalization method alag hai, so that capitalization method is given. Capitalized value is 2,70,000, right? That is the profit which is capitalized divided by 20%. Capitalized value of business is FMP, future maintainable profit average, divided by cost of capital 20%, and therefore capitalized value of business is 13,50,000 minus 12 lakhs. What is 12 lakhs? You can make out 12 lakhs is the total assets which are there. 12 lakhs is the total assets, right? Fixed assets plus current asset 12 lakh. So that is the total asset base of the company. So capitalized value of business 1350, उसमें से capitalized value of business is 1350, correct, minus value of asset is 12 lakh, and therefore goodwill value is 1,50,000. 3 years purchase of super profit gives a lower figure, that is 90,000, as it does not take into account potential value of 90,000. So capitalized value provides a valuation of 1,50,000. This can be corrected by using weighted average for determining average profit with higher weights for more recent years. So profit is showing a rising trend. See, always when we apply the average, it should be weighted average, because how can we take profit of 5 years on a linear basis, linear trend basis? That is not possible, right? Profit which is recent year profit, current year profit should get more weightage. So let's assign weightage of 1 2 3 4 5. So सबसे जो old profit है, 5 साल पहले वाला प्रॉफिट 1,90,000, उसको वेटेज दिया 1 का. उसके बाद 2,30,000 का प्रॉफिट है, उसको वेटेज दिया 2 का. एंड जो लेटेस्ट प्रॉफिट है 3,75,000, उसको वेटेज दिया 5 का. So latest profit is always given weightage of 5, and 5 because 5 years, and that is how you calculate weighted average. It comes to 45,30,000 divided by 15, because now sum total of weight, summation W, sum total of weight 3,02,000. So super profit then becomes 3,02,000 minus 2,40,000. So in our formula what we have written, super profit is equal to FMP post tax. उसमें थोड़ा बदलाव कर सकते हो, some modification you can make, and that is FMP based on weighted average profit. Into bracket you write down, you have written the formula FMP, so write down FMP into bracket based on weighted average. And this you will use if there is too much of variation in the value of goodwill, using super profit method and using capitalization approach. I repeat, if there is too much of difference between the goodwill value, too much of difference in the goodwill value, by applying super profit method and by applying a capitalization method, then only you will take weighted average, because this is not justified. On one hand you say goodwill is 90,000, that's a minimum range, and maximum is 1,50,000. इतना कैसे difference हो सकता है? Like 90,000 and 1,50,000 is a material difference in the figure of goodwill. And now therefore we understand the fallacy. Fallacy means mistake, our own mistake in calculation of 90,000. Probably, see, this 1,50,000 is sort of a quick check, a thumb rule, a quick check or a cross check. Based on my asset valuation, and capitalized value of business, goodwill comes to 1,50,000. So based on financial statements also, goodwill value should be around 1,50,000. If capitalization approach is giving me value of goodwill as 1,50,000. See, these are all thought process. This is a thought process. These are all thoughts which are coming to your mind only when you calculate both the values. पहले हम लोगों ने खाली एवरेज प्रॉफिट निकाल के गुडविल कैलकुलेट किया, and the figure came to 90,000, and then we realized that based on the market valuation, the figure is coming to market valuation because it is capitalized value of business, it is coming to 1,50,000. इतना variation कैसे हो सकता है? That means there is some flaw in my balance sheet approach in the original calculation of super profit method. Then I adapt myself, I modify my calculation by applying weighted average, and weighted average apply करने के बाद you get the answer of goodwill as 1,86,000. 1,86,000. So price of the goodwill can be negotiated between the range of 90,000 and 1,86,000. Minimum is 90, maximum 186, but capitalized value is 1,50,000. So when you are sitting for negotiation, there are two-party negotiations which take place, they should be well equipped with all these calculations, well equipped with all this data, which will enable the managements to do the negotiations, fair negotiations. Always we use the word fair, F-A-I-R, fair negotiation. In mergers and acquisition, the deal has to be a fair deal, and you always have a win-win situation for both the companies, win-win situation, a fair deal. So no party should be made to lose at the cost of others, or other way, no party should be made to benefit at the cost of others, right? And therefore it's a valuation range. Yesterday itself I told you, at no point of time a final student will say this is the value. It is a valuation range. For all practical purposes, it is valuation range. So do we need to calculate by 3 methods, though not mentioned in the question? Yes, Vinaya, not by 3 methods. I would say only 2 methods we have applied. One is super profit method and other one is अर्निंग कैपिटलाइजेशन अप्रोच, दैट इज कैपिटलाइज्ड वैल्यू ऑफ बिजनेस, इसको बोलते हैं अर्निंग कैपिटलाइजेशन अप्रोच. So two methods we have used, and both methods we have to work, and then only we get to know that yes, there is a major difference. Then weighted average लगाता हूँ मैं, so that is a modification of the first method. Okay, in that sense you can say three methods we have used: simple average, weighted average, that is super profit method. Method is one, super profit method, simple average, weighted average, and second is earning capitalization approach or capitalized value of business approach. Yes, but good that you asked for this valuation of goodwill, and that's why I was forced to solve one question. I was taking it for granted that yes, because it's a TY topic, but good. Final level we have to be different from TY, and therefore we have to show or showcase little extra knowledge, yeah, and valuation range. All right, friends, as much as possible I have covered from almost all the topics, with more emphasis on mergers and acquisition. So we are through with our crash course, at least on valuation, for the time being. This month's, November month's WRC bulletin, our WRC bulletin of November month is devoted to a theme, valuation. So therefore, you being final students are expected to go through our WRC bulletin, which is nowadays e-bulletin, WRC e-bulletin, which is on valuation. The theme for November is valuation. Please go through. There are 15 articles which are given in this bulletin. 15 article hai. And as final students, you are getting ready for campus placement also. So from that point of view, just academic study is not enough. Learn various perspectives of valuation when you have a separate magazine, separate newsletter dedicated only on valuation. Yeah, so go through, and who knows, some of the learnings from this newsletter you can make use of while answering questions on case study, where there is a theoretical part when you want to express. This knowledge remains at the back of mind. So during these 3 days of Diwali, 4 days of Diwali, don't waste time. Read, don't let it go. Read this WRC bulletin in your own interest. All 15 articles are devoted only on valuation. So all your doubts on valuation will get clarified, and you can use this data while writing answers to case study questions on valuation. Happy Diwali to all of you, and yeah, it was very nice of you that it was very nice of you that yes, you all attended in large numbers. In fact, YouTube video is also available, so those who have missed out some part in between or one of the sessions can always go back and listen to the recorded voice. But of course, thorough study is required, and you can't restrict yourself only to what we have covered in the crash course. Yeah, this was just a jhalak or a quick refresher. We are aware that 3 days it is not possible to devote time, so much of time, for each and every topic in detail, and numericals also have to be solved. And the paper is very saturating paper. You feel very exhausted at the end, but good, no, it is paper number 20, the last paper. So with this your exam gets over and you get a feather in your cap. The qualification also you get with the last paper. So though it is this paper out of 4 papers is most exhaustive in terms of laborious calculations, lot of calculations. So when you come out of the exam hall after 3 hours, you feel really saturated and exhausted. Yeah, so do all the best, do well in the exam, and come out as members of the institute. This is what I always say. We would like to see and meet all of you as members of our profession, members of our institute. Thank you very much. All right, thank you, Aditi madam. We have completed the portion for the crash course, and session is over.